This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. 3 days in a row. I can't stand it. Just too much love going on in the studio. PPI yesterday gave us some disinflationary love. Up we go. Paul, the VIX, 18.38 before the 8:30 CPI report.
You think about this, a week ago, last Monday, we breached 60 on the VIX. People were really panicking here. We've settled down since then. Sitting
on a long-term moving average. I looked at the log VIX today. And actually, semi-log, semi-VIX today.
Okay, very good.
And we're sitting on the long-term moving average. A break here below would be like tangible in terms of what a recovery in the stock market. We've seen those levels on close, rounding them, 39,800, 5,400 SPX. NASDAQ 100 rounded at 19,000.
Yeah.
What a recovery
nice.
as well.
Exactly.
I said I went all to cash in the panic Monday, but I was already in cash when I went all to cash.
Exactly.
Think of the people that went all to cash.
I know, that not a good trade. I'm looking here, some news coming across the tape, thanks to Rich. Mars to buy Kellanova for $83.50 per share in cash. That is now official. That is a big deal. That Kellanova was spun out just recently, a couple of years ago. So here we go. Mars, which is a private company.
This has been terribly reported. Should we shoot the MBA consultant that came up with the name Kellanova?
Yeah.
I mean, it's from Kellogg's. I get it. I don't know where the Anova's from.
New Kellogg's.
I look at their brands. First of all, the Rice Krispie treats. Lisa, do you allow Rice Krispie treats in your house?
No.
You should. They were one of the 4 food groups. They were one of the 4 food groups here. Distribute these if you would right now. Don't open them until Michael Barr gets here.
Yep.
I would have named it Cheez-Its, okay? Because these people, Mars Bar, Snickers is buying Cheez-Its.
Yes.
Rich, that's the headline.
And Pringles and Pop-Tarts.
We'll dive deep into this. We're devoting the entire 8 o'clock hour to Cheez-Its.
And somebody we know, Tom,
Kellanova
is very fond of Cheez-Its.
Oh, really? I did not know that.
Yes, somebody we know.
Very good.
On the 6th floor, very fond of Cheez-Its. So we're long Cheez-Its.
We're long Cheez-Its today. Good morning. Thank you, Mars, for that transaction. From the Interactive Broker Studios, our Bloomberg Business Flash. She loves Cheez-Its. Lisa Mateo.
And I'm trying to swallow at the same time that I'm eating these. Good morning, guys. Well, right now we have futures. Little change, but there's still hopes that today's CPI report is going to allow the Federal Reserve to start cutting interest rates next month. According to estimates from a Bloomberg survey, both the core and headline figure probably advanced 0.2% in July. So we have NASDAQ futures little change up about 8 points, Dow futures little change down about 2, and S&P futures little change up about 1. We have the 2-year yield at 3.92%. That's down 2 basis points. The yield on the 10-year 3.83%, and that's down about 1 basis point. To commodities, we have spot gold. That's higher at $2,473 an ounce. We have Brent crude $80 a barrel, WTI crude $78 a barrel. Google in the spotlight, and it's not just for that new Pixel lineup. Sources say the U.S. Justice Department considering whether to force a breakup of the company after a court ruled that it monopolized the online search market. We have shares of Google down nearly 1%. And yes, you talked about it, Mars set to buy Kellanova for $83.50 a share in cash. It is official. We have Kellanova shares up more than 7%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Joining us now, really to get us started, just a perfect moment with this recovery from the panic of a VIX 60 down to a Lehman Brothers 30, and now breaking through 21, right now 18.37. Is someone who writes a note here. She's not as distracted as she was 10 days ago. Virginie Maisonneuve with us right now, and of course with Allianz Global. And of course, Virginie, she says, let's get back to basics. But, Paul, she's been distracted. Let's look at Maisonneuve 2 weeks ago. Did you ever swim in the River Seine?
Never. And, I want to believe that the cleanup program has been good, but I'm not sure I would do it today either.
There we go, Virginie Maisonneuve on the Olympics. Virginie, just to waste 30 seconds here, what a triumph for the French people and for Mr. Macron. Politically, how do you perceive this will follow through in Paris and across the French Republic?
Well, sports and politics are very different. And, I've just written a piece called Summer Storms and Political Winds. And I'm really, I think we should be aware that the next 6 months are going to be really driven by politics.
Right.
As you know, in France, we have something that's been postponed from during the Olympics, given the results of the last elections that we had. And I'm afraid that all the great news and the great spirits from the Olympics might be swept away when we go back to electing the next prime minister.
You say get back to basics. When you look at earnings, part of basics is you have to generate revenues. One of our themes this week is corporations perhaps are losing pricing power. Do you agree?
Yeah, I agree. And I think what's really interesting is if you look at the Q1, Q2 numbers that we had some very strong numbers. If you look at expectations for Q3, data has been cut in all regions. So you are seeing a comeback. Part of it is, of course, the disinflationary trend that helped companies on the reverse, right? And when disinflation is kicking in, it has an impact. So I think we should expect that combined with a global slowdown. So if you look at construction globally, if you look at the price of rebar, if you look at different elements, of course, with the long tightening of monetary policy, it would be normal to see that slowdown taking place between now and the end of the year.
So given that backdrop, Virginie, where do you see, I guess, relative value for equity investors globally these days? Where's the opportunity?
Well, so volatility definitely will offer opportunity. I still like tech. As we know, tech was overextended, particularly in the large cap stocks. But I think if you see some sharp comeback in some of the prices there, you should position for the long term. I think we are seeing, if you look at current positioning of investors, there's still a very large underweight in healthcare. And of course, in the US, this will have a political element to it, but also I would say global investors have been shy of exposure to consumer discretionary. So you can see a rebalancing there. I still like on the long-term industrials. And I'm very concerned about dirty energy, if you want to call it this way, because of the warm war that we have ahead of us and the need for renewable to continue to take market share.
So we're just kind of finishing up this earnings season, Virginie. We're getting some retailers this week, kind of finishing it up. What was your takeaway from this earnings cycle here? Definitely some concerns, it seems like, in terms of corporates, in terms of future consumer demand coming. How did you look at these earnings?
Yeah, the consumer is finding it difficult. And, it's a trend that you see mostly everywhere. Asia is a little bit different. But if you look at German consumer confidence, although Germany might be helped by higher wages, inflation for real wages in Germany will actually do better this year than in the past couple of years. But generally, consumers have been squeezed despite employment levels that are quite strong, but mostly through the lag effect of inflation. So I think what we need to focus on is the job market, resilience of the job market. And of course, this is where we're at a crossroad in a way, right? Inflation versus job versus growth, and continue to really understand the purchasing power of consumers in different segments.
One final question, Virginie. Where do you sit on the cliche that I want to be long America and I want to be long large cap America?
Well, I like small cap, actually. I think so. For us, it's not so much per country than bottom-up stock opportunities, and we find them all over the world. I like small cap because on the small cap had been really held back by a lot of the fear on higher rates and actually will be a very big beneficiary of lower rates. And we find those around the world. But I think, the U.S. continues to offer attractive opportunities, but the top-down overweight the U.S. is not the name of the game, in my view.
Virginie, thank you so much. Virginie Maisonneuve at Allianz. Paul, I was distracted there. Barr came in and looked at the Cheez-Its.
Yes, I know.
We had to, at least had to contain them.
My favorite food groups.
It is. We're going to do a photo shoot here in a moment, so get ready. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. The United Nations Security Council met to discuss the latest developments in the Middle East. Israel still awaits retaliatory attacks from Iran after the assassinations of Hezbollah and Hamas leaders. U.S. Ambassador Linda Thomas-Greenfield called for Israel and Hamas to return to negotiations for a ceasefire deal that will end the fighting in Gaza and return the remaining Israeli hostages held by Hamas.
I cannot stress enough President Biden's view that it is time to bring immediate relief to the long-suffering people in Gaza and the long-suffering hostages and their families. The best way to do that is a ceasefire in Gaza with a hostage deal.
Meanwhile, the U.S. has approved $20 billion in arms sales to Israel, including scores of fighter jets and advanced air-to-air missiles. The United Auto Workers Union filing complaints with the National Labor Relations Board against Donald Trump and billionaire Elon Musk after their conversation on X, claiming they're threatening striking workers. UAW President Sean Fain.
This is a which side are you on election, and that's why working class people will vote for Kamala Harris and Tim Walz, because they're one of us, and Donald Trump and Elon Musk represent everything that this nation stands against.
Even Teamsters boss Sean O'Brien, who spoke at the Republican convention, says firing workers organizing, striking, and exercising their rights as Americans is economic terrorism. Meanwhile, a senior advisor for the Trump campaign released a statement saying, in part, the lawsuit is a shameless political stunt to erode President Trump's overwhelming support among America's workers. Hunter Biden facing new criticism this morning. The New York Times reports that the president's son wrote a letter to the U.S. ambassador to Italy in 2016 to seek help from a foreign business venture. Hunter Biden's lawyer denies any wrongdoing. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
It's a very exciting day, of course, for staff. We want to give you a little vignette into the morning. Sweeney leading the charge here.
Sure.
With the Cheez-Its. We say good morning to all in Grand Rapids. Come on, Michael Barr. Did you eat all your Cheez-Its already?
You just hold on. Ooh, let me open this thing up here. You go ahead.
Lisa's way ahead of us.
Yeah.
It's the only unhealthy thing, Lisa.
Yeah, I didn't
think
think that was on your approved list, Lisa.
No, this is I know it's really bad for you, but this
is your
like
little
my
cheat
weakness.
thing. Okay. All right.
Thanks.
All right. Very good.
We say thank you.
And the Mars company buying it for cash.
Well, I take immense
Assuming
issue with Bloomberg News, which is leading with Pop-Tarts. I mean, the frosted strawberry Pop-Tart has a certain ring to it. Lisa Mateo, do you let the frosted strawberry Pop-Tarts into the Mateo household?
I do not, but what I used to allow, what they also do, Kellanova, is Eggos. Eggos is something.
Eggos were so big.
Yes.
The middle child, that's all she would eat. Eggos.
Cinnamon.
Oh, boy.
Yeah. Cinnamon sugar frosted Pop-Tarts got me through
That's
2 years
true.
at Duke
There you
graduate
go.
school.
Frosted s'mores, and most important, frosted brown sugar cinnamon shards, the most Massachusetts and North Carolina.
Nice.
There you go.
I'm telling you. That pizza.
There you go. It's one of the 4 food groups.
Yeah.
We'll have much more on this. Seriously, on Kellanova, this is a multiple markup here in the food group as Mars takes out a Kellogg's spinoff. So we'll have more on that today. Are you done with your Cheez-Its, Michael?
I'm done licking my lips.
So you can continue forward here. The VIX 18.41. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Little movement in futures this morning with the S&P 500 coming off its biggest four-day rally of the year, gaining 4.5% during that stretch. Right now, we'll head over to S&P futures. Yeah, a little changed. Dow futures, same there, down about 5 points. NASDAQ futures, little change, down about 6 points. After producer prices rose less than expected yesterday, today we shift the focus. We get another inflation read when the government reports on the cost of living. Bloomberg Economics anticipates a tame July read for CPI. In June, it dropped for the first time in more than 4 years. Let's go to the housing market. U.S. mortgage refinancing surged last week by the most since 2020. Well, the reason why? Borrowing costs. They continue to drift lower. The MBA says the contract rate on a 30-year fixed mortgage fell to 6.54%. Over to the two-year yield, 3.92%. Little change. The yield on the 10-year, 3.83%. And that's down 1 basis point. Southwest Airlines feeling more pressure from Elliott Investment Management. The activist investor has nominated 10 candidates, including 3 former airline CEOs, for the carrier's board. Southwest shares up about 1%. And Alaska Air Group and Hawaiian Holdings, well, they will extend their closing for their proposed $1.9 billion deal. They're going to extend it again, this time 1 more day, to give U.S. antitrust enforcers more time to talk about a potential settlement. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. I can't say how well-timed this conversation is. We're up on CPI today, and Drew Mattis will give us a brief on that. But the heritage of his career, back to Maury Harris and UBS, is a heritage of optimism and belief in what America's doing. Drew, what does the recovery that we've seen in the last 9 days signal to finance in America?
I'm not sure it signals much, Tom. I think the response to payrolls, the direction was right, the magnitude was way wrong. There have been a lot of people talking about how, it's weather affected, it's this, it's that. You just have to look at the unemployment rate moving up to get the picture. It's not a hard picture to read. There are more people looking for work than there are jobs. It doesn't matter if they're new entrants or not. As the unemployment rate moves higher, when people go into their meetings with their bosses and they talk about the next year, very few people are going to be putting their hands up and saying, like, hey, you know what? You need to pay me more or I'm out the door, because the boss knows that that's basically a lie, right? No one's walking out the door right now. And that'll put downward pressure on wages, which should then in turn lead to lower inflation. So, I'm with Neil Dutta on this one. The Fed should be going. They should have gone in July. It's a mistake. It's not a critical mistake, but it's a growing mistake, particularly if the hawks win out in September.
Mr. Dutta joining us after the 8:30 CPI report. Paul?
Hey, Drew, so are we at the risk here, or has the Federal Reserve put the U.S. economy at the risk of a recession here by being perhaps a little late?
I'm not sure we're quite at a recession risk yet, but certainly the odds went up after the last payroll report. The unemployment rate's moving. The only thing the Fed can really do at this point is figure out how far they want to let the unemployment rate move, right? Everything long and variable lag. So, we're basically, 4.5 is pretty much locked in. You want to let it get up to 5? Because if you do, then, skip the September meeting too, and we'll see what happens. These things have a way of building on themselves over time. And I think that's really what has me worried, is that this Fed seems to be putting its faith in, little data points as opposed to kind of the bigger picture right now. And I don't know why they're being so hesitant. It just doesn't really make a lot of sense.
All right, well, given that backdrop, Drew, where are the opportunities here? We just came through a pretty solid earnings period. Where do you see opportunities here?
I mean, to be honest with you, it's not really like risk on mode right now, right? So it's, make sure you're happy in the assets that you're in. Cash is paying reasonably well still. So I think that there is this kind of rationale for caution that makes a lot of sense, and that's causing people to kind of take some chips off the table, or more importantly, not put new chips onto the table.
What's the new 60-40 forward? What's your 60-40 next year? Is it 60% stocks, bonds, or oil?
I think at some point you're going to want to look at all these risky assets that you're not really getting paid to hold, right now. And if we get a bit of a reset, people should be thinking about, if things were to normalize a little bit in spread land in corporate credit world, for example, what credits do I want to own, and where do I want to own them at, right? And then, if they hit your targets, then go in for them and just realize you're going to be in for a little bit more of a wild ride. But you're probably going to be okay, right, in terms of the overall state of the economy. The risks of recession in 2025 have been rising. They're rising because of the delay in the Fed's action. They're rising because the unemployment rate's moving higher, and that tends to migrate up. And they're rising because of the uncertainty around the election, right? So all of these things kind of are hitting at the same time, and it's making it kind of I like to say it's interesting, but it's kind of less than that.
Right.
It's just kind of the noise is back, and people have to get used to it.
Hey, Drew, let's rewind a little bit to a week ago Monday. What did you take of the performance, the reaction, and the volatility in the markets on that Monday, and kind of where we've come since then?
Well, it's good because I think if you saw the Monday reaction, and then the question was, is that going to translate into Tuesday, right? If it kind of continued into Tuesday, we'd probably be having a much different conversation right now, right? Because things do tend to spiral, and so the fact that it was arrested on Tuesday meant that the Monday reaction was just
got a little bit.
It just shows you that people don't know which direction things are going, and they're very uncertain, and they don't have a lot of conviction. So when you don't have a lot of conviction, people just wash back and forth. So it's a wave of lemmings. The lemmings are moving left, lemmings are moving right. We used to call it student body left, student body right. Just kind of this whole idea of kind of a herd mentality. And I think you're beginning to see that herd mentality again because people have no conviction, with the exception of your guest coming up after 8:30.
Right. All right. So I guess, it's interesting, Drew. A lot of folks are wondering, is the Magnificent Seven still the trade here? Is that where we sit here, or do we try to get a little bit more creative?
I think people are going to try to get more creative. I'm not an equity guy, but I would say, the reason people got so excited about that group was because of the potential for, productivity gains from AI and kind of what technology could be doing for us in 5 years' time. And history has shown, if you look back at the 1990s, that was kind of a great way to think about the world, right? And then people began to extend into kind of parts of that ecosystem that weren't really as relevant, right? When the internet was kind of coming online. So I think, we have to be careful that the same thing doesn't happen again. But I do think that's why those companies have been doing well, is because people kind of look at them as kind of the future. And that narrative's still in place.
Drew Mattis, thank you so much. With MetLife this morning, getting us the CPI report, Jim Caron and Neil Dutta will be with us at 8:30. Drew Mattis gets us prepared for that report. Is it like an afterthought today after PPI yesterday?
Yeah.
It's not the same. I think.
This is, for a lot of folks, the CPI is kind of where you see it, where you feel it here, and we'll take a look. And I'm just looking at this CPI, ex-food and energy, year on year.
What is it?
3.2%. That's higher than where the Fed would like to see it, but it's down from 3.3% last period, and it's certainly down dramatically from where we were kind of at the peak during the pandemic. So
we don't keep score of our guests. I'm just as interested when they're wrong as when they're right. That gets people upset. But can we line up the people that have been right and check off Stuart Kaiser of Citigroup, who I believe 10, 12 days ago was saying, you got to participate.
Right.
You gotta be in the game. What a lesson the last 10 days have been for those who have a short-term perspective of 3 years.
Yep.
And of course, so much of the modern market is less. Our discussion with the market strategist from Robinhood was illuminating the other day.
Yep, absolutely.
I mean, it's just, dealing with the short term as well. Red and green on the screen again. The headline here is the VIX under 19, 18.42 on the VIX. Yields are in and in again. 10-year down 1 basis point, 3.83%. An hour away, the inflation report of America. Good morning, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures pretty much treading water. This is ahead of U.S. inflation data. Forecasters expect CPI to show another modest increase last month, reinforcing expectations for a Federal Reserve interest rate cut in September. Now, speaking of which, Atlanta Fed President Raphael Bostic says he wants more evidence that inflation is moderating, but says a rate cut is likely before the end of the year. So futures, little change. We have the 2-year yield over at 3.92%. That's little change. A yield on the 10-year 3.83%. That's down 1 basis point. Shares of UBS in Switzerland, they are higher, up about 3%. Earnings smashed estimates. Wealth inflows hit $27 billion. UBS also outperformed, driven by higher revenue in its global markets and also global banking businesses. And after slashing jobs and expenses, a filing shows Intel sold its holdings in chip technology creator ARM Holdings during the second quarter. Now, that sale would have raised about $147 million for Intel. Intel shares up about 0.5%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. Folks, this is the conversation of the day for global Wall Street on the trends in place. Just look at the VIX, 18.440. But we're going to do a clinic right now with Stuart Kaiser of Citigroup Global Markets here, who can do this expertly. Pros, look at the VIX, VIX, the volatility, the fear, the complacency of the S&P 500. But the adults in the market like you look at the VVIX. What is the VVIX?
Basically, the VVIX, good morning, Tom, is the price you pay to own upside in the VIX or to hedge against a very large rise in the VIX.
Is it a second derivative of the VIX?
Yeah, it's the implied volatility on a VIX option, I guess would be the way.
What does it say right now?
It says the market's still a little bit stressed out. So that VVIX is 90 to 95th percentile over the last 15 years. So I think what that's telling you is we've made a lot of progress in the market over the last week, but there's still some underlying concerns and positioning risks.
I mean, I'm looking at VVIX, Paul, at 113. It spiked out at 150. We never look at this, folks. And it's on a Fibonacci basis, it's 60% back to trend.
Yep.
It's not. It's got another 40% to go. I'm not buying. Do you think I should buy Apple or Microsoft as my first share?
You can back up buy both of them. Why not? Go all in.
Still in triple leverage. So Kaiser says the VVIX looks very
Hey, Stuart.
VVIX.
So what was the trading desk like at Citi on the third floor, 390 Greenwich Street, a week ago Monday morning?
It was pretty tense. I skipped the gym and got to the desk at 6:30 that morning just to be sure. Look, I think there was concern on the desk as well as with clients that the VIX clearly was overshooting what the other data would have implied. So I think when that happens, you get a lot of people asking questions. Am I missing something? What's going on here in the market? And so I think it was a little bit of anxiety or just a little bit of confusion about the market reaction.
Like in the show industry, when the VIX hits 60, the salespeople and the traders actually speak to you?
Occasionally.
So what do you see since Monday? I mean, it seems like, wow, a snapback in the market. Tom's been rightfully calling out the VIX now below 20. The market's kind of come back. Was it just a technical thing in hindsight?
Yeah, I think it was a little bit of a technical positioning thing. I mean, what I was saying is, when you early that morning, you had S&P futures down 5%, the VIX above 60. Once the cash markets opened, that kind of stabilized itself a bit. So I think, if we come in Monday and the futures were down 2% and the VIX was at 40, it would have felt like, oh, this is a little bit of a stress, but nothing crazy. And what happened that we definitely saw some dip buying and opportunistic buying, from the institutional community into the tech space. You got that claims number. I know one claims number doesn't mean a lot, but when the market's on edge, that claims number helped kind of stabilize things, and the market's been able to find its footing again.
What is the behavior of the Magnificent Seven through all of this, in your view forward?
The Magnificent Seven to me is a really interesting time because if you were to go into like a recessionary type data, like people were worried about after payrolls, you'd say, I want to own a large balance sheet, safe company that pays a dividend. That sounds a lot like tech. The challenge with tech is the positioning is so very, very long. So I think, tech right now is in a little bit of a, I don't want to say precarious spot, but people I think are definitely trying to figure that out. Like, you mentioned Microsoft. Microsoft, probably one of the safest balance sheets in the world. Do I own Microsoft into a recession, or do I get worried that everybody in the world else owns Microsoft and they might need to sell that going in? So I do think the combination of weaker core businesses from Amazon and Microsoft and Google talking a little bit about maybe a little bit less CapEx spending intention has gotten people a little bit concerned about the Mag 7. And we're going to need to see NVIDIA, I think, put up strong numbers at the end of the month to kind of get sentiment back to full strength.
What do we do in the meantime here? I mean, do I try to look for value outside of the Magnificent Seven? Do I just stick with my 2-year Treasury, 3.92%? What are you hearing from your clients?
Yeah, I think it's a little bit of a mixed bag. As I mentioned, we definitely saw some tactical kind of buying the dip type situation. I think that was the view that, hey, the semi stocks were down, let's say 20%. So if I liked them at 100, I definitely like them at 80, right? So I think we saw a little bit of that. For us, that payrolls print earlier this month was very important for us because our view is to remain long equities until the labor market comes under real pressure. And I think you would argue right now payrolls is right on the borderline for where you'd be worried. So we're going to stay a little bit cautious here. We're going to see CPI today. Thursday, I think, actually might be more important than CPI. You get Walmart earnings, retail sales, and claims. So, for us, it's remain cautious here, collect a little more data, and really try to understand what risk reward is.
Outside your remit, but Walmart, I don't have it in front of me. It's like a 30 multiple. I don't get it. It's ridiculous. Kellanova, founders of Cheez-Its, they should. I hope when they take it out, Mars, they call it the Cheez-Its division. It's trading at a 20 multiple forward. Is it 20 multiple the new value? I mean, are we that messed up fundamentally that when you look at market dynamics, we're parsing 20 as a cheap stock?
Well, look, I think everything's relative, right? And you buy what's scarce. So when you have the S&P trading 20 times, then that kind of becomes your baseline if you're, trying to analyze stuff. I think most investors, if they were looking historically, would say 20 is not cheap, but it's a relative story, right?
Is Apple scarce?
Is Apple scarce? I don't know if that's a very good question. What's interesting for Apple, you didn't ask this question, but there's a lot of really interesting positioning dynamics related to that Warren Buffett sale.
Discuss.
So basically, when Warren Buffett sold that stock, he became less than a 5% owner. What that does is it increases the freely traded Apple stock, and it means the S&P is going to have to add a ton of Apple on the rebalance in September. Okay. So I do. Apple is a scarce stock in the sense that they have a really interesting new product. It's a large cap growth stock that is sort of impervious to U.S. economic growth. So I think it's scarce in that way, and I think Apple, frankly, for the next month is a very interesting stock. You've got an iPhone event, you've got this rebalancing story, and you've got Mag 7 stocks that are frankly, just facing a little bit of a litmus test as we go into the end of the summer.
I mean, to me, the iPhone event is the fact that I'm actually going to upgrade for the first time in like a decade. I got the iPhone.
I said even Sweeney's.
I'm upgrading.
I'm with you. Dan Ives is saying this.
Exactly right. So that's the event for the marketplace. In a falling interest rate environment, what's Citi saying about small and mid caps these days?
To me, the lower rates theoretically help small cap, but they only help small cap contingent on U.S. growth being strong. Okay. So our view on small cap is that trade can work, but you need soft landing data. Okay. If the Fed is lowering rate, or if rates are falling because growth is slowing, you do not want to be in small cap in our view. We think that's kind of a bad risk reward trade. If you're printing, let's say, 150 to 200K jobs and you get a few cuts from the Fed, insurance cuts, then I think that's very, very positive for small cap. So I think in this case, it's the why that matters. Why are those rates moving lower? And that makes the difference.
Because we did have that rotation trade several weeks ago where the outperformance of the Russell 2000 versus the S&P was really historic. Yeah. Levels. I think that was a short-term trade. Are you still seeing that playing out, or is that kind of a one-off?
I mean, our view then was, if you rewind to early July, you printed 206K jobs, and you got 0.6 on core CPI. That is soft landing data, and to your point, that lit a fuse on that small cap underperformance. This time around, you're coming off a 114K print. So the question is, does a low inflation give you soft landing data or not?
Well, you're coming off the news yesterday. I mean, did we get the CPI celebration yesterday? In less than an hour? That's the heart of the matter. How much did we get done yesterday on a disinflationary conviction? Which is what we're going to see.
Look, I think you got a bit done. If I think for later today, if you print between 0.1 and 0.2, I think that's the sweet spot.
I want you to talk right now to non-fancy people, not the people you talk to on the trading floor and all that at Citigroup and
We're not that fancy, Tom.
I want you to talk to people that have Pop-Tarts in their kitchens, like Lisa Mateo, and frosted strawberry Pop-Tarts. What's the price of going to cash or being gloomy on the market?
The price of it? Look, I think the price right now is lower than it has been probably for any time in the last 12 months, because I think the risk reward in the market is less good. So if you're in yield, if you're in cash right now, I think there's less opportunity cost, right? You're sort of giving up less potential upside in the equity market today than you would have been 6 or 12 months ago. And look, if the Fed cuts rates, then you benefit from that a little bit too if you own a 2-year bond. So you kind of benefit on that side of things, and then you re-enter. So if you're thinking price, like where are we going to go from here? I do think upside in equity markets is a little bit more limited today than when I've been on, 3-6 months ago. So I think
Stuart Kaiser, thank you so much with Citigroup. Just
Tyler Dixon,
brilliant with the U.S. equity trading as well. We have a complimentary bag of Cheez-Its upstairs for you as you go out.
Yeah, as you go out.
We're only talking. We do not have Rice Krispie treats in the famed Bloomberg food court. I lobbied for that years ago. Got vetoed at the highest levels of the companies.
We're not doing
I know. Rice Krispie treats. Nope. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. The United Nations Security Council held a meeting calling for Israel and Hamas to return to negotiations for a ceasefire deal to end the fighting in Gaza. U.S. Ambassador Linda Thomas Greenfield.
We've called on both sides to resume urgent discussion on Thursday, August 15th, in Doha or Cairo to close all remaining gaps and commence implementation of the deal without further delay.
Meanwhile, the U.S. has approved $20 billion in arms sales to Israel, including scores of fighter jets and advanced air-to-air missiles. A progressive member of Congress who's been outspoken against Israel's conduct in Gaza has won her primary in Minnesota. Democrat Ilhan Omar defeated former Minneapolis Councilmember Don Samuels 56.2% to 42.9%.
We know it is joyful to want to live in a peaceful and equitable world. So I am incredibly honored by this victory tonight.
Congresswoman Ilhan Omar's victory bucks a trend for progressives in Congress. Two other members of the so-called Squad, New York's Jamal Bowman and Cori Bush of Missouri, lost their primaries. Unlike their races, pro-Israel groups decided not to get seriously involved in the Minnesota race. In a surprise announcement, Japan's Prime Minister Fumio Kishida is stepping aside after only 3 years in office. He won't seek re-election next month. Tropical storm Ernesto continues to churn in the Caribbean after brushing past Puerto Rico. Some level of storm surge is expected. Puerto Rico Governor Pedro Pierluisi warned people to stay away from the water.
We are particularly warning tourists and our own population to stay away from the ocean.
Forecasters expect Ernesto to strengthen to a hurricane today. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Paul Sweeney and Tom Keene here on the travel and the entertainment of the moment. The airplanes are full. The hotels are fuller, is what I've figured out.
Yeah, we're going to talk to Tony Capuano, and you've had the the leisure traveler strong for the last couple of years coming out of the pandemic. The business traveler, I guess it's an evolution of how business travel is playing out. There's that kind of
Has it come back?
I'll go work for a couple of days, then I'll take a couple of days, for myself because I got this hybrid thing going.
I sent this on to Brockton to give to Lisa, but Eric Schmidt was heated at a Stanford conference of how he's against work from home.
Is he? Okay.
The founder of Google.
Sure.
I mean, he's quite a guy. He didn't mince any words about it. He just said, you can't get up the sense of community and innovation.
I kind of feel like that's sailed. That ship has already sailed, and we're in a hybrid world now.
I don't disagree.
It's just a question of what's the mix in that hybrid world. So.
We're going to have to see. We're within 1 hour of this important CPI report. Let's not forget retail sales tomorrow. Don't forget, we are out on YouTube. Subscribe to Bloomberg Podcast. That's the best way to get us. It's the best thing to do. Subscribe to Bloomberg Podcast on YouTube worldwide. From New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Investors kind of in this wait-and-see approach before more inflation data. CPI will be released in under an hour from now. So futures, little changed. We have the bond market, the 2-year yield 3.92%. That's down 1 basis point. The yield on the 10-year 3.83%, and that's down 1 basis point. We have spot gold higher, $2,474 an ounce. We have Brent crude $80 a barrel, WTI crude $78 a barrel. To currencies, the dollar weaker, Japanese yen weaker, euro stronger, British pound weaker, Bitcoin up about 1% at 61,000. Shares of Peloton, they're higher. They're up about 5% right now. The reason why? Well, the company announced this multi-year worldwide partnership with Google Fitbit. So now starting next month, Fitbit premium users are going to get access to a number of Peloton classes. And yesterday, it was about the change in Starbucks leadership. Today, Victoria's Secret announced a new CEO. The company's nabbed that top executive from rival Rihanna's lingerie brand. Her name is Hillary Super. She's going to lead its turnaround. Victoria's Secret shares, they're up about 14%. That is your Bloomberg Business Flash.
Would you like to weigh in here?
I love Rihanna's brand. I think Victoria's Secret has a little ways to go to catch up with it. I have Rihanna's lipstick.
Rihanna's lipstick.
She has a whole beauty brand, but
this is Rihanna
the singer.
The singer.
The singer.
Oh.
Yes.
So remind me that the CEO of the Singer's brand is going over to save Victoria's Secret.
Yes, because Rihanna has her own lingerie brand.
Okay,
so
I'm
this
learning
is a person
every day.
Who I
It's
know,
amazing. Economics, finance, investment, international relations, and lingerie. Thank you, Lisa Mateo, for that. Ken's up in HR going, Tom, put a cork in it right now.
Exactly. It's business, but boy, the moves in some of these CEO moves are having a huge impact.
We're starting with this. I'm going to bust his chops, but the guy coming into the studio right now, did you see the size of his entourage?
Oh, I know.
I mean, he's at Marriott Bonvoy, and he's got to get the entourage
guy
that does it well. Sit down, because we got this is a 1-hour conversation. Anthony Capuano joins us from Marriott. I've cut to the chase. Lisa, review with Mr. Capuano is probably not briefed on this. The Rihanna lingerie CEO is going to save who?
Victoria's Secret. Because remember we had the Starbucks. That was all the news about the CEO. So now another CEO change.
CEO's important, I guess.
Yes.
Why is this? What is? And you did this. I mean, you had one of the toughest acts to follow. I'm going to get emotional here over the death of the CEO at Marriott. People talk. You did it. What does a CEO do that makes them worth billions of dollars to Starbucks or Victoria's Secret?
Well, I think they if they're doing their job effectively, they quickly and clearly articulate a strategy that the organization can wrap their head around. They give that organization the tools to execute against that strategy, and in some ways they get out of the way.
And then you work 70 hours a week, and what people don't realize is, Paul, I mean, Mr. Diamond's, his golf stream's a little nicer than mine, but you guys travel nonstop.
Well, certainly CEOs in general travel. We're in 141 countries, and so the highlight of my job is to get out and see those.
Okay, I got a bone to pick.
I mean,
you got what are you making now? Where are your margins right now down the income statement?
At the property level?
At the Tony Capuano level, where are your margins are solid, right?
Very solid.
That's because you quote it in euros. At Rome at the St. Regis, sold out through most of October. You're popping $1,727.34 per night. How did that happen? Is there a hotel shortage?
I think across Southern European markets like Italy, Greece, Spain, there is an almost limitless appetite, particularly from high-end American tourists, to go to those destinations. And it's driving demand through the roof, and compression gives us pricing power.
What are you doing on the capital deployment side in terms of building, buying more properties? I know you're about to launch your 9,000th hotel.
Yeah, Friday I'll be down in Longboat Key for the opening of the St. Regis Longboat Key, which will be our 9,000th
properties.
hotel.
I mean, so talk to us about growth. What do you tell the street for the next 2-3 years in terms of buying, building, acquiring, whatever?
Well, they're delighted to hear we're not buying.
Okay.
We have 9,000 hotels. We own 20. And I'd be happy to sell you any of those 20.
Okay.
So we want to be as close to a perfectly asset-light model as possible. Doesn't mean we don't use the balance sheet for growth, whether that's minority equity, mezzanine debt, credit guarantees, and the like. But what we said, we did an analyst day at the end of last year, and we said we expect net unit growth to be between 5.5% and 6%. In Q2, we delivered 6% growth. And obviously, that's on the biggest base of any player in the sector.
Why asset light? It sounds good to me as a potential shareholder because I think about it, I don't have to deploy a lot of capital on the ground and everything. What's the asset light model? And is that
it really
different from
eliminates a lot of the volatility that you have as a big real estate owner.
Okay.
Right? Because a disproportionate share of our fees are off top line revenue. And so you don't have that volatility that a hotel REIT has, for instance.
You know, I've seen a lot of news just recently. It's the 1-year anniversary of the Maui wildfires. God, I can't believe it's been a year. And that was obviously a huge impact on that part of the world. How did it impact you guys?
It was devastating. We lost 3 of our associates in the fires. A couple hundred of our associates lost their homes.
You've got properties there.
Yeah. We have a big footprint in West Maui. I was there about a month ago as part of the recognition of the 1-year anniversary. But they are coming back. We had the commander of the Army Corps of Engineers give us a tour of Lahaina. I think there were 1,140 some odd residential lots. 1,120 have been fully cleaned. There's a house under construction in Lahaina, which was a great symbol. The hotels are back and running. Occupancy's up to about 60%, but they need us to come visit.
Right.
Tell us about destination vacations. We're all commiserating here about, the fam and 3 kids going down to Disney World, not your remit. And it's just outrageously expensive. It's almost like we've priced the American middle class out of the vacation market that we all knew as kids. Where's that going to be in 5 years?
Well, it's a great question. It's part of the reason we've entered the mid-scale segment, which was a tier of our business we had not operated in previously, because there is that value-focused customer that says, it's not really in my budget to go to an upper upscale or a luxury hotel.
Yeah, New York Regency, the St. Regis under beautiful construction. I've been over there twice now. Your people are total class act, given the construction that you've got on the first floor. Paul, $1,375 a night just to get in. It's a little cubby hole on the 6th floor. What are you going to do in the middle level?
So we've launched a new transient mid-scale brand here in the U.S. We launched a extended stay mid-scale suite in the U.S. We acquired a company called City Express in Mexico, which operates squarely in the transient mid-scale. And we've launched a brand extension in Europe and Middle East called 4 Points Express. So we've got a variety of growth platforms that will allow us to really offer the sort of value accommodation.
How do you deliver margin there like you can easily do in the luxury area?
It's a very lean operating model. So you don't have bellman, you don't have doorman.
Right.
In some of those, you have no food and beverage offering. Clean, comfortable, efficient operation.
When are you going to start a share buyback program like Apple?
Well, I don't know that it'll be like Apple, but on our Q2 earnings call, we affirmed our guidance for full year that we'll return $4.3 billion to shareholders through dividends and buybacks.
What's the, just real quick, what's your perspective, the consumer? How's the consumer out there?
Yeah, it's interesting. It's really sort of bifurcated, I think. I think that at the lower end of the income brackets, that consumer's feeling a lot of stress.
Okay.
The confluence of interest rates and inflation, they're under a measure of duress, and you see it. In fact, if you look across our industry, the economy segment, where we don't play, was the one segment in the industry that had negative RevPAR in the quarter.
Anthony Capuano, thank you so much. He is at Marriott, their chief executive officer, just a sterling job in driving the ship forward at $1,375 a night.
That's
the breakfast at the St. Regis, the corned beef hash.
Yeah, I love
the
corned
eggs
beef
over.
hash. Yeah.
The coffee, I go for the coffee.
Okay.
I don't even care about the corned beef. It's just the coffee is.
You don't see corned beef on a lot of menus.
You don't. You know, everybody's gluten free. I took Lisa to breakfast there. She walked out. She says, "I'm not eating corned beef." Anyways, that's where we are. We got inflation coming up here in 35 minutes. Tony, thank you, so much. We got inflation coming up here in 35 minutes. Where were you a bunch of years ago, 1990-something, where your daughters played in Sync and Backstreet Boys 14 times through the afternoon?
There you go.
It was very bye. It was the bye summer. We're featuring boy bands today. Lisa's demanded it. Good morning.
is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo. We are here for an inflation report. We'll do that in 29 minutes. I'm looking year-over-year inflation. Paul's looking year-over-year inflation. Michael McKee is looking month-over-month. A negative statistic last time around, Paul. It'll be interesting to see CPI month-over-month, top line.
Yep.
Last time, deflation, negative 0.1%. And now 0.2% positive is a survey.
Yeah, so I think the market is pricing in kind of a moderating inflation story. That's certainly been the story on a CPI basis, where we peaked north of 6%, now on an annualized basis down to about 3.2%.
I like the anecdote out on YouTube. Good morning on YouTube, live chat. Somebody stopped by the RV place, and they said RV dealerships, they looked extremely busy in hiring.
Sure, okay.
That's what you keep talking about.
Yeah, absolutely.
Like there's a percolation there, even within the supposed slowdown and the supposed disinflation. The supposed yield market shows lower yields in the last 24 hours. The Sweeney yield, 2-year yield, 3.92%. Paul, the 10-year real yield, 1.75%.
1.75%. Okay. Right. All right. That gets your attention.
We're going to get to the Bloomberg Business Flash, but we got to admit, we see our guests line up here, and we had InSync on. Thanks for the huge response to buy. Lisa was grooving. Laura Rahm, did you see she was dancing to InSync?
Yes, I know.
As she was getting ready for her
But
appearance
Lisa Mateo
here.
has a favorite boy band. Did you know what that is?
Yes.
No.
New Kids on the Block. She's
Yes.
a blockhead.
I saw them.
Yes.
I went to the Boston Music Awards. Ellis Paul, I think, was there. And it was great. And they came out, and I didn't know who they were.
Ooh.
And they blew me away. It was like New Kids before they were famous New Kids.
Oh, so you got them before.
And
That's great.
It was so cool to see how good they were.
I'm telling you, I grew up with 3 sisters. It was like the talk of the house.
Right. Laura
We
Rahm
each
is
had our
going,
own
why am I
favorite.
on this show? From the Interactive Broker Studios with our Bloomberg Business Flash, Justin Timberlake's favorite.
You got it. Well, Wall Street right now, kind of on hold. This is as investors waiting today's CPI report. There's hope that it's going to allow the Federal Reserve to start cutting interest rates next month. We shall see. Now, according to estimates from a Bloomberg survey, both the core headline figure probably advanced 0.2% in July. Now, looking ahead, tomorrow we go on to retail sales as well as earnings from Walmart and also Tapestry, who's the owner of brands like Kate Spade and Coach. So NASDAQ futures, little change, same for Dow and S&P futures. We get to the 2-year yield, 3.93%. That's little change. The yield on the 10-year, 3.83%, and that's down 1 basis point. Spot gold higher, 2,474 an ounce. We have Brent crude, $80 a barrel. WTI crude, $78 a barrel. And yes, it's official. Mars agreed to buy Cheez-It, Pringles, Pop-Tart maker Kellanova for nearly $36 billion. Mars is going to pay about $83.50 a share in cash. Kellanova, as you know, spun off from Kellogg last year. Their shares, Kellanova, up more than 7%. And another company making news, Google. Sources say that the U.S. Justice Department considering whether to force a breakup of the company after a court said that it monopolized the online search market. Google shares down about 1%. That is your Bloomberg Business Flash.
Why do you mention Pringles? I remember when they came out, I ate one bite.
Love Pringles.
My
kids love them.
Really?
I can't stand them.
Okay, can we just flesh this out? Club crackers. Your parent, they have a stick of butter in each one.
Yes.
Yep.
Your parents would hide them from you, so because the kids would eat them all. They would like it for cocktails.
Yes.
Manhattans
Delicious.
and
Right.
Scotch and soda.
Yep.
They keep the Kellogg's Club crackers up in the shelf. Laura Rahm knows this. She joins us right now from FS Investments. Laura, was the PPI yesterday the CPI celebration that possibly we'll get here in 26 minutes?
PPI is the pipeline, and it's very goods focused. It's really, I think, had been historically a better leading indicator of inflation, and still is a real piece that indicates what we know, that goods prices are falling. In fact, today, the services piece is probably much more important for that overall inflation picture. So that's where I think the attention really needs to be with this morning's numbers. Last month, we finally saw relief on rent inflation. Everyone's going to be looking for a repeat. To me, it's really an issue of, does this align with markets still torn between 25 basis points or 50 basis point rate cuts? That's the lens I'm looking at this through.
Laura, is the risk here that the Fed is in fact late to cutting rates and that this economy is either in a recession or right on the cusp of one?
That to me, we are not on the cusp of a recession. Okay. And I think this concern really has stemmed from the fact that markets were so hard over volume 11 optimism that any incremental slowdown was going to be a disappointment. And that's what we're seeing. We're seeing us move from 2.5% GDP, probably an unsustainable pace, to something more like 2%. And through that, view, you really are looking at an economy that's still on solid footing. Please don't look at ISM manufacturing to get your economic news. That was what kind of kicked off the mess initially, followed up.
Okay, why? We got to go there. Come on, Laura, you're expert at this. I mean, the history's FX, but you're really good at the granularity. Why should we underweight our study of ISM manufacturing?
It's a broken clock. It's been wrong now. It's been in the contraction territory for 20 out of the last 21 months. In fact, that's one of the reasons why so many folks got it wrong a year and a half ago, looking at chronic ISM manufacturing in contraction. To me, you don't look at a broken clock to tell the time. Even though it may be right twice a day, it's not where you go. You need to look at other indicators like initial claims is kind of, to me, the best bellwether right now, that weekly little number.
Laura, what do you think the Fed will do, and what do you think the Fed should do? Are they different?
Yeah. As always, I think they will cut 25. I think that given today's context, a 50 basis point rate cut would not be a bad idea, just to correct for the fact that they've made progress on inflation. They've got room. They're at 5.25. They could take us down 50 basis points. However, I think they are worried that would signal big trouble to markets. And so I think they're going to err on the side of more caution. Right. I would be in favor of sort of front loading bigger rate cuts now and, then staying on hold for longer into 2025.
I'm sorry, Laura. I got to go there. We got to go FX as well. I got a little bit of dollar weakness, 104 through to a 102 level. That's not dollar weakness, but it's a whisper of it. Do you believe in resilient dollar is a backdrop to your strategy at FS Investments?
I think we should prepare for more dollar weakness. We're going to see policy uncertainty coming from the U.S. We're going to see rolling right into election uncertainty. The currency is one place that does absorb election uncertainty, even more so than the traditional markets. And finally, when we look at Europe, I think the only thing that could really stop dollar weakness is Europe really pushing hard against European bloc strength. But that currency block, I think, is going to strengthen more.
Laura, thank you so much. Brilliant there on ISM manufacturing. She told me once. She said, "Tom, your show's a broken clock."
Yeah, exactly.
She told me that. Laura, FS Investments, thank you so much. 20 minutes away from an inflation report. And what I've got to say, Bloomberg Surveillance. We're brought to you by IBKR with Interactive Brokers Forecast Trader. You can trade your views on key economic and climate indicators. Visit ibkr.com/forecast, ibkr.com/forecast. Get started today with our news in New York City. Michael Barr.
Thank you very much, Tom. Paul, Lisa, the United Nations Security Council held a meeting calling for Israel and Hamas to return to negotiations for a ceasefire deal to end the fighting in Gaza. Ambassador Linda Thomas-Greenfield says that the U.S. is deeply concerned about reports of civilian casualties in a Saturday attack on a school and mosque compound in Gaza.
We've said repeatedly and consistently that Israel must take measures to minimize civilian harm.
Meanwhile, the U.S. has approved $20 billion in arms sales to Israel, including scores of fighter jets. Russian air defenses downed 117 drones and 4 tactical missiles over various regions in one of the largest overnight attacks of the war. Meanwhile, President Joe Biden has commented publicly for the first time on Ukraine's incursion into Russian territory. Bloomberg's Ed Baxter has the story.
While Ukraine has fought a defensive war for the most part since the Russian invasion, something the U.S. has supported, President Biden says the move definitely makes things more difficult for Russian President Vladimir Putin.
It's creating a real dilemma for Putin, and we've been in direct contact, constant contact with the Ukrainians.
Meanwhile, there are reports that Zelensky has told his top military officials to prepare for the next step, indicating more moves. Ed Baxter, Bloomberg Radio.
The United Auto Workers Union has filed federal labor charges against both Donald Trump and Elon Musk. The charges are tied to particular comments made during Trump's X interview with Musk on Monday. UAW President Shawn Fain.
Employers need to be held accountable in this country when they break the law. It is a federal right of workers to go on strike, and they cannot be fired for that. But, people like Donald Trump and Elon Musk, they laugh about firing people because they can care less about people and about their jobs and what they do to their careers.
A senior advisor for the Trump campaign says the lawsuit is a shameless political stunt to erode President Trump's overwhelming support among America's workers. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom Paul Lisa.
Part of our agreement with Mr. Barr is anytime the Tigers score over 3 runs, we've got to talk about it. 13 runs yesterday. Scuball.
More than that.
His 14.
50.
Excuse me. I lost count. I turned it off after the 6th inning. Michael Barr, I had no idea. I think this is right. The last time somebody won 20 games was Jared Weaver and David Price 12 years ago. I had no idea.
Yeah. 20 games, seriously. First of all, is hard to get there for any pitcher. But, man, 20 games?
Kershaw hasn't won 20 games.
Yeah.
I had no idea.
No, it's hard.
And this kid's out at 14 games now.
Right.
And they didn't trade him.
Yeah. No, thank you. They did not. And one thing I wanted to talk about the Yankees right quick because, Juan Soto, you knocked in 3 home runs, and that's very good. And now all of a sudden, I was big on Jazz Chisholm, now,
How long is he out?
Well, they're still doing tests.
Right.
They're going to find out. He's head first in the home plate.
Yeah. Surveillance correction. Someone on the Braves last year won 20 games. Spencer Strider, right?
I'm surprised to see, Michael, Tigers only 6 games under 500, but they're still 14 back. So what are you going to do?
Well, by the way, the Yankees are first place in the AL East, just one ahead of Orioles.
Mr. Rubenstein was in the other day.
Sorry.
Yeah, exactly.
I'm sorry. We don't discuss business at the dinner
interest
table.
Now in the Orioles. Go O's.
Okay.
So we'll get down to Camden Yards sometime.
Yeah, but it's just we're right on the cusp of where every game matters. We're not there yet, I would say. We're like a week away.
We're close.
We're close.
Yeah, we're close.
And with all the wild cards, it seems like almost every team is.
It's fat. Which
I think is good.
Do you like it or not?
I do.
But we're going to run out of time. We'll talk more about this. It's important. It's what matters. CPI, 16 minutes away. This is Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Little movement in futures this morning with the S&P 500 coming off its biggest four-day rally of the year, gaining 4.5% during that stretch. So now we have S&P futures, little change, same for Dow futures and NASDAQ futures. Well, after producer prices rose less than expected yesterday, today, about 15 minutes from now, we'll get another inflation read. The government reports on the cost of living. Now, Bloomberg Economics anticipates a tame July read for CPI. In June, it dropped for the first time in more than 4 years. To the bond market, the 2-year yield 3.93%, little change. The yield on the 10-year 3.83%, and that's down 1 basis point. Southwest Airlines feeling more pressure from Elliott Investment Management. Now, the activist investor, it's nominated 10 candidates for the carrier's board. Southwest shares up about 1%. And Alaska Air Group and Hawaiian Holdings said that they will extend the closing of their proposed $1.9 billion deal. Again, it's going to be by one more day to give U.S. antitrust enforcers more time to talk about a potential settlement. Alaska Air up about 2%, Hawaiian Holdings up 10%. That is your Bloomberg Business Flash. Tom and Paul.
And Lisa Mateo, thanks so much. Commercial-free folks across the nation and worldwide now into the CPI report, and we start strong with this important report. Neil Dutta to join us. Jim Caron with us right now from Morgan Stanley, always with important notes. We look at the physics of our price change and what it means for fixed income. Yields are in. Ian Lingen at BMO Capital Markets says we've had a reset of the range of yields. Do you agree that price is up, yield is down, and the new high yield is a lower yield?
Absolutely. I mean, look, one of the things that we're looking at here is, and I think the way that Ian framed it as a reset is correct, because clearly what has happened really since the last CPI report about a month ago is that we did reset to lower yields, and we are in a new lower yield regime, I should say. And this is an area that is really expecting at least 200 basis points of rate cuts from the Fed, and we were not expecting that a month ago.
Is that a fair expectation? Because the market was wrong coming in to this year with 6 rate cuts priced in, and we're still searching for our first one.
Yeah, so that's a great question. So I think that anywhere from 150 basis points to 200 basis points is a reasonable expectation for right now. I would err on the side of it being a little bit less than that. And I know that's somewhat may be contradictory to what the markets are pricing. The markets are pricing, like I said, in 1 year's time, about 200 basis points of cuts. I think that we are in an inflationary environment. We are having a reset lower. Inflation is coming down. There's no question about that. But I still think that many of the factors that pushed inflation up aren't going away. And that is likely to keep the Fed on edge to just cut rates without any consequence of creating higher inflation down the road. The one thing that they are worried about the most is that if inflation ever starts to resurge again or becomes unanchored, then they're going to have a problem. So I think that they're going to be a bit more cautious in terms of their rate cutting cycle. I think they're likely to cut in September, but I don't think that this is just a free-for-all.
Mm-hmm. Recently, you guys introduced your fear framework. What is the fear framework, and did it predict a week ago last Monday when people were fearful, I would say?
No, I'd say that the timing was quite lucky on that. So fear represents Fed, employment situation, asset prices, and interest rates, and that's what we come up with fear. Now, there's one important indicator that's missing in that, and that's inflation. And the whole point of this is that inflation is effectively what changed the narrative in the market from bad news is good news to bad news is bad news, right? Because back in late June, early July, what we thought was that if inflation's coming down, the Fed can cut rates, and that's a good thing, and asset prices like that. What people were missing, though, was that why is inflation coming down? Is it because of a loss of demand? And if it is, then is that loss of demand then about the employment situation if the employment markets are getting weaker? Lo and behold, we have a Friday payroll number, that came out, and all of a sudden, big miss, and everybody's worried about employment. But the point is that the narrative changed from inflation to employment, and that's the key.
The international scene, speaking of supply and demand, is an oversupply from China. I'm not going to do it here, folks, 9 minutes away from the report, but a brilliant report in Foreign Affairs about the supply coming out of China. that's another disinflationary impulse. But how much of an impulse is that, says Morgan Stanley?
Yeah, and that's the key thing, right? So China, what China has to do right now is they're going back to their old playbook. What they're good at doing is exporting their manufactured goods at a lower price. And they want to effectively, for lack of a better word, dump those things onto Europe and dump those things into the US. But will it be so easy this time around? And we have this T word that's out there, tariffs. And what you're seeing not only in the US, but you're also seeing in Europe is the use of tariffs to prevent that. Why? Because it's hurting industry. It's creating an employment situation that might get weaker. I mean, look at Germany. Look at German growth. In many cases, it's struggling. And if China starts to dump if China starts to dump goods onto the European shores, that's only going to make things worse. And I think the U.S. is worried about this too. So tariffs, unfortunately, today is a new policy tool. It does increase inflation, but that would be a counter to what normally would take place.
So I'm going to go back to a week ago Monday. A VIX at 65. What was that all about?
Yeah. I think what VIX at 65 told us was more about positions than actual fundamentals. What people got worried about was that with the weak employment number, that suddenly the U.S. economy was falling off a cliff, that we were going to get this accelerated rise in the unemployment rate, and this was going to create bigger problems down the road. And I think what we saw was that there were a lot of overcrowded positions, whether it was in the Mag 7 big tech or as the popular yen carry trade. And a lot of these things got unwound all at once, and the market was very narrow. If it's narrow going in, it's narrow going out.
It's a correction.
Yes.
That's all. Other than Lisa, it's ancient in this room, and we remember this as totally normal.
Tom, I couldn't agree more. Look, we had about a 10% correction. That's kind of normal. I mean, that happens annually. That's the way we looked at it. We bought into this. So when we saw this weakness in prices, we did not align it to economic fundamentals. Yes, fundamentals are slowing down, but we did not think that this was the start of a big bear market. So we saw this as a correction, exactly right, and we did buy into this.
What will CFOs do with the physics of the last 10 days? We saw Meta. Do you get a phone call? Does somebody call you up and say, I got $1 billion of Meta debt. Jim, how much do you want? Do you get that?
No, I don't. Unfortunately, I don't get those calls. But look, I think the debt markets are in an interesting place right now because in many cases, they have been able to fund themselves, and with this lower move in rates, they're able to refinance their debt at more favorable levels. People want yield, and people want bonds of decent quality with decent yields. So I don't think that there's a credit squeeze. Look, one of the things that thankfully did not happen, is that we didn't see a credit crunch. We didn't see any dysfunction in the markets, a breakdown in repo, a breakdown in liquidity. All of these things that would cry for an intra-meeting move by the Fed were not occurring. And I think that is very important. So the debt markets were actually one of our first signals when we saw the meltdown in equities. We said the debt markets aren't going along with this. I think that's a sign for us to get in.
CIO of Cross Asset Solutions. Okay, what's your preferred asset solution these days?
So we are still firmly in the equity camp at this point. So we do think that we are in a secular bull market in equities. We think that there will be corrections, that there is going to be times when markets sell off, but we do see this as a buying opportunity. So that's I'd say that's our number one. And I think that bonds have maybe got this pretty well priced at this point.
You've got some FX experience. Talk to us about the yen here.
Yeah, so dollar yen is a pretty interesting one, right? So look, I mean, the yen has weakened quite substantially over the past couple of years. We think that the yen will continue to weaken on a longer-term secular basis. And I'm not going to make an FX call here on anything, but
that's a Morgan Stanley tradition. Bond guy can make an FX call.
No, we're not going to do that here. But one of the things I'll say is that I think that we are going to trend higher, and we may test levels in dollar yen that we saw in the late 1980s, and that number is around 200. So, but that's going to be over a long period of time.
I mean, if you have a physics major in, it just makes sense. They quote Winston Churchill: "The farther backward you look, the farther forward you are likely to see." How charming from another time and place. Is anybody looking farther backward now to look farther forward?
Yeah, and that's the thing. And I think that's what the markets are getting confused right now, is that they're looking at the previous historical data set, which was very much a disinflationary data set over the past 10, 15, 20, even 30 years. And they're trying to apply those same rules to what might happen in the future. One of the things that we emphasize at Morgan Stanley Investment Management is that I think that we are trading out of sample, meaning that we are in a different inflationary environment, and a lot of these dynamics may not work as well as they had in the past. The other Winston Churchill quote is, if you're going through hell, keep going. And I think that was the motto for last week, where effectively we saw a lot of craziness in the markets, but we wanted to keep going, so we bought.
Talk to people short duration, people like Sweeney. He's loaded up with a 2-year. Where are they going to be in 6 months?
I don't think they're going to be too far from here. The thing is that if I think the Fed funds rate is going to go down to, say, 3.5%, 3.75% by the end of this rate cutting cycle, maybe even 4%, I still think there's going to be a spread of the 2-year yield over Fed funds. So therefore, the 2-year yield at around 3.90 today, I don't think is a bad measure. I think this is pretty fair at this point, and that's the problem with short-term yields.
How do you believe this Fed will and should act once it starts cutting rates? Is this something that we're going to get something every meeting, 25 basis points or 50 basis points to start? How do you think they'll play it out?
So the Fed always looks at this through the impact of financial conditions, meaning what do their rate cuts do to the broader market, right? So what I'll say is, looking at where bond yields are today, it's almost like the Fed has already cut interest rates 150, 175 basis points. So what we have to be careful of is trying to understand, if the Fed cuts interest rates right now, what yields are going to go down? The only yield that's going to go down is the Fed policy rate. Unless you believe there's something worse happening in the economy and longer-term yields are going to go down, I think we're relatively well priced for the Fed to cut between 150 to 200 basis points already.
And on a 1-minute count to the inflation report, we welcome all of you at 8:28 Wall Street time across this nation, around the world, on Android Auto, on Apple CarPlay, on YouTube. Subscribe to Bloomberg Podcasts out on YouTube. Those of you on YouTube, tell your friends, Romans and/or countrymen, about it. We're humbled by how it's going, particularly internationally. Good evening to all of you across the Pacific Rim, waiting for this inflation report to set up. I got a little bit of energy on the screen. Little lift to the market right now. Futures up 4, the VIX 18.34. We got Bitcoin up 60, rounded up 62,000. Let's be optimistic here. But in the yield space, the 10-year real yield 1.75%. I got the Sweeney 2-year.
Love it.
You just heard Jim Caron talk about stability there, 3.93%. The 10-year yield 3.82%. 2-10 spread. I'm only doing this to impress Caron. 11 basis points is the 2-10. We have that disinversion, if you will, a few days ago. Paul, your thoughts here on CPI?
Yeah, I think the market's looking for a little confirmation of what we heard or what we saw yesterday from the PPI, and kind of continuing this trend. I think the last period was a little bit of an anomaly with a negative month-on-month number. I'm not sure we're going to see that, but again, the market's kind of anticipating this trend, which would then allow, Tom, the Fed to begin cutting at their September
year over year, 3.0%. Year over year core, 3.2% is the expected number. None of that matters. Jim Caron and Mike McKee, they're looking at month over month because they're pros. I'm just like looking at basic CPI as well. Futures up for red and green on the screen. Dow a little bit of a lag, and I'm going to call it all fractional noise. Let's look at inflation in America, and the answer is, oh my word, CPI year over year. We breach 3%, 2.9%, I guess is how we'd look at that. Pretty much on plan. We'll have to get the revisions in. I think that's key right now. Karen's stretching over, looking at my incredible Bloomberg Launchpad. It lifts with a little bit of energy here. Futures go from up 3 to up 11. The VIX comes in. Are we going to get a 17 handle on the VIX?
Ooh,
I think we'll get there.
Could be interesting, yeah.
And on the yield space, the Sweeney yield churns here. Karen nailed that. Yield's just sort of churning here is how I'd put it, but definitely an equity lift now off of the flatness that we saw. Paul, what do you observe?
Well, first I observed that Jim Caron is a Bloomberg terminal user. He's got the green dot going. He's all logged in like he's doing his job here. CPI month-on-month, Tom, came in at 0.2%, smack in line with the consensus.
Right.
I remember last period was negative 0.1%, a surprise. Ex-food and energy month-to-month, 0.2%, right in line with the consensus. You annualize all that stuff, CPI, ex-food and energy, 3.2%, right in line.
We don't have the revisions yet, but Jim Karen, I'm sorry, it's like Dow 10,000. I mean, 3% down to 2.9% has got to be the talking point, right?
That's got to be it, and it's a small talking point. I mean, it's a move in the right direction. Everything else, like you said, came out right on the screws, 0.2% month over month. Not seeing anything here, so no harm, no foul. And sometimes, no news is good news, and that's what we're really getting here. Tells the Fed that that they're on track.
You say right on the screws if you went to Bowdoin, because nobody at Bowdoin uses nails. Because when you make a wooden boat up in Maine, you use screws, not nails. I didn't know that. So you say right on the screws. Paul, to Mr. Karen, please.
Yep, very good. So, Jim, I mean, this presumably gives the Fed just a little bit of more leeway to kind of really consider a easing policy.
Yeah, I think what we're seeing is nothing that's overly disruptive, right? So inflation's moving in the right way. It doesn't change their narrative, right? This would have been a bad number if inflation picked up. But then again, remember what I said earlier, it's also not a substantially weak number. So therefore, it's not showing that there's a loss of demand and pricing power and the consumer is rolling over. So this is really as Goldilocks as you're going to get.
Jim Karen, thank you so much. With Morgan Stanley this morning. Can't say enough about it. Commercial free here till 9 o'clock this morning. Good morning across America. I'm going to call it a churn to what we see here right now. The VIX flat, 18.12. And on the yield space, well, again, it's a mixed yield as well, a little bit higher yields right now. But all in all, as Mr. Karen said, it came in pretty much on plan. Our economic indicators, always including this important day of CPI, brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to Commonwealth.com to learn how. Drew T. Mattis with us earlier this morning was citing the thoughts of Neil Dutta. He joins us from Renmac right now. Neil, I'm sorry, all the blah, blah, blah. The headline is 3.2% was survey, and CPI CPI year over year was 3%, and it comes in at 2.9%. I believe that's below 3%.
Yeah, it is, Tom. I mean, thanks for having me on. I mean, core CPI inflation rose just 1.6% at an annual rate over the last 3 months. I mean, that suggests that we're sort of on track. I do think if you peel back the onion a little bit, there is some interesting kind of details, which sort of leads me to believe that perhaps the core PCE number may not be as soft as what we saw with CPI. As an example, medical care services inflation in CPI declined 30 basis points over the month. I don't think the PCE equivalent is going to be nearly that weak. And we did see an unexpected perking up of rental inflation over the month. So rent of primary residence after collapsing in June kind of gave some of that back in July. But, we have to kind of go through the numbers. But, look, I mean, to me, it's really about balance of risks at this point. The unemployment rate has been climbing and core inflation has been slowing. And we know that inflation is a lagging indicator. So whatever inflation is at the moment, that represents yesterday's monetary policy. So if inflation has already been slowing, I think, just based on inertia, there's probably more room for it to keep moderating. And so I think the Fed needs to kind of get going here. The markets right now seem to be looking at September as sort of a coin flip between 50 and 25. And, in my mind, I mean, I think the slowing in the economy and the fact that the inflation situation has broadly been kind of resolved, in my view, I think that will allow the Fed to go, I think, a bit more aggressively than not.
Justin Wolfers at Michigan out with the headline here, Paul. Importantly, nearly all the rise in CPI, as Mr. Dutta mentions, was due to shelter, which is a backward-looking measure. Wolfers of Michigan.
Interesting. So, Neil, how about for the hawks on the Fed? What is the PPI and CPI data? What do you think how they're interpreting it?
I mean, lately it seems like the hawks will just find whatever excuse to kind of justify a tighter policy. I mean, I think what's interesting is, in recent days, just how anchored the hawks have been to the June summary of economic projections. If you recall, that projection had just one cut baked into the year for the year, and I think what's interesting about that is, I mean, Powell basically said that they were talking about cuts as soon as July, and he kind of teed up September. So what's been surprising is just how out of sync the hawks of late look relative to what Powell was saying in July. So, I don't know. I don't really what to make of that. I mean, I do think that the Fed speak is a little bit out of sync here, quite frankly. We'll see what Powell says at all. I think there's obviously a lot riding on that. But I do think that it's also a sort of admission by omission by just how kind of skittish the doves have been. They have a lot to press their case, guys. I mean, the unemployment rate's been rising, quits have been declining, which means that wages are slowing. So where's the inflation really coming from? So I've been surprised not only from how hawkish the hawks have been, but how little the doves have been speaking.
The VIX under 18, 17.96 moments ago. Mohammed El Arian, thank you for joining us the other day. Dr. El Arian noticing the surprise cut by the Reserve Bank of New Zealand. Neil, do you sense worldwide a new churning of respected and less respected central banks cutting rates? Is that the trend here?
I mean, you've generally seen foreign central banks cut sooner than the Fed. I mean, that's the ECB. There was a weaker than expected, I think, inflation report out of the UK earlier. That's kind of fueling bets that rate cuts are going to happen a bit sooner than previously anticipated. Obviously, and the Bank of Canada has been already easing, and inflation over there has generally been slowing. So it's the Fed that looks out of sync with the rest of the world. And frankly, the trade-offs are not all that different. As I mentioned, as I think the Fed has kind of like a little bit behind here. And that's primarily because of the risks around the unemployment situation. Unemployment has been climbing here in the U.S. And one of the reasons why it's climbing is because it's more challenging for the recently laid off to find jobs. So that's kind of, increasing the stock of unemployment because it's taking longer for people to cycle out of unemployment and find a job. And I suspect that continues because nothing about the near-term growth outlook suggests that the unemployment situation is going to stabilize on its own. Growth is moderating as, we see slower residential investment, we see weaker consumer spending, and that's going to ultimately take some of the juice out of the employment market.
And Paul, do you think I'm wrong here that I'm saying, okay, I'm sorry, 2.9 is not 3.0?
Right.
It's like, $19.99 for a case of Cheez-Its. Right. It's not $20.
It's not $20.
I'm sorry. And it's same with the unemployment. When do we get to 4.9?
I don't know.
And we hit 5?
Yeah. Exactly.
It's different than 4.9.
It is. Hey, Neil, where is this U.S. economy here? Has the Fed, perhaps waiting too long to cut rates, is it really brought a recession risk maybe a little bit more on the front burner?
Well, I don't know that it depends how, so I'll put it to you this way. I think that the markets are a little bit underestimating recession risk. Does that mean that I think we're going to have a recession? No. But the way I think about it, this may sound a little bit too cute, but the recession risk rises the longer the Fed waits. And then once the Fed gets going, I think the recession risk will start to fall quite rapidly. That's sort of how I'm thinking about it. But I do think that the risk right now is that the Fed underdelivers and that the economy is still slowing. And so I think that's generally more of a, negative setup for risk appetite.
And I guess we're going to get a better sense of the consumer tomorrow, retail sales. We're also going to get some Walmart earnings as well. And boy, that's such a barometer of how the U.S. consumer is doing. How is the U.S. consumer doing from your perspective?
I think the consumer is kind of meh. You know, I mean, I don't think it's obviously, I don't think it's gangbusters. It's not falling off a cliff either. But, you know, there's nothing particularly exciting about consumer spending right now. I mean, we're probably growing something in the vicinity of 2% in real terms at most. You know, I do think when you look at it, I mean, consumers, to me, are increasingly resistant to higher prices. I mean, that's one implication of the fact that household inflation expectations have been coming down. I mean, by extension, that means that people are resisting higher prices, and they're making more trade-offs with respect to value and volume. And that's not the kind of, that's not how you get a demand-driven inflation, if people are making those trade-offs.
Neil, can I ask the dumb question of the day? Thank you, folks. I'll do that across the nation. So when the Fed cuts rates, what exactly happens to our economy? Like, what will you look for?
Well, I mean, the first thing I'd expect to see is certain private sector borrowing rates kind of adjust once the Fed begins easing. But I'd keep an eye on credit sensitive areas of the economy. I mean, that's what you'd expect to light up. I mean, one of the reasons why I was leaning against recession in 2023 was because incomes were rising rapidly, right? Because the labor markets were fine and inflation was slowing, so real incomes were surging. That's no longer the case. So you need to create a handoff from incomes to more credit-sensitive areas of the economy. So that's what I'm going to be looking for. Things that are tied to more income-based consumption, those will be slowing given what we're seeing in the labor markets. But credit-sensitive areas need to pick up the slack, and that requires a bit of Fed easing. So that's why I think, you know, the thing to look at really is just what's going on with the housing market. I mean, so far, what we're seeing is refinancings have picked up, but you haven't really seen much of a positive impulse in mortgage purchase demand. You need to see that, I think, if you're going to talk about growth, you know, stabilizing in a meaningful way.
One final question. Do you sense that is a marginal incremental change in the 30-year mortgage rate, or is it like a jump condition where all of a sudden, boom, we get a new housing market?
Well, I mean, I certainly think that mortgage rates need to fall a lot more from here in order to juice the housing market, which means that the Fed has a little bit of work to do. You know, it's interesting. If you look at mortgage rates, I mean, they're basically running at the lowest level since, I think, last spring. But you haven't really seen home sales or purchase demand run at the best level since last spring. So why would that be? And that's because I think inflation has slowed more rapidly. So 6.5% on a 30-year fixed looks a lot better when inflation's 4.5% than when it's 2%. And so it's just a reminder that real rates are still quite elevated.
Neil Dutta, thank you so much. Greatly appreciate it on this day of inflation. Getting a little bit, not a lift to the market, but certainly not a pullback. And the salient point, let me look at the 10-year real yield before I speak. Yeah, the salient point is the VIX, 17.67. Paul, can I say I've never seen this?
Well,
like a 30 VIX or 50 VIX, and all of a sudden we're well under 20.
Last Monday to hear what a gyration in the market.
Commercial free to you on this important day of CPI retail sales tomorrow, and we are commercial free through the support of Interactive Brokers. Bloomberg Surveillance brought to you by Interactive Brokers portfolio analyst. Consolidate, analyze all your financial accounts on one powerful dashboard for free. Sign up for Portfolio Analyst at ibkr.com/free PA. Once again, ibkr.com/FREEPA. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. The United Nations Security Council met to discuss the latest developments in the Middle East. Israel still awaits retaliatory attacks from Iran after the assassinations of Hezbollah and Hamas leaders. U.S. Ambassador Linda Thomas-Greenfield called for Israel and Hamas to return to negotiations for a ceasefire deal that will end fighting in Gaza and return the remaining Israeli hostages held by Hamas.
I cannot stress enough President Biden's view that it is time to bring immediate relief to the long-suffering people in Gaza and the long-suffering hostages and their families. The best way to do that is a ceasefire in Gaza with a hostage deal.
Meanwhile, the U.S. has approved $20 billion in arms sales to Israel, including scores of fighter jets. The United Auto Workers Union filing complaints with the National Labor Relations Board against Donald Trump and billionaire Elon Musk after their conversation on X, claiming they're threatening striking workers. UAW President Shawn Fain.
This is a which side are you on election, and that's why working class people will vote for Kamala Harris and Tim Walz, because they're one of us, and Donald Trump and Elon Musk represent everything that this nation stands against.
Even Teamsters boss Sean O'Brien, who spoke at the Republican National Convention, says firing workers organizing, striking, and exercising their rights as Americans is economic terrorism. Meanwhile, a senior advisor for the Trump campaign released a statement saying, in part, the lawsuit is a shameless political stunt to erode President Trump's overwhelming support among America's workers. Hunter Biden is facing new criticism this morning. The New York Times reports that the president's son wrote a letter to the U.S. ambassador to Italy in 2016 to seek help for a foreign business venture. Hunter Biden's lawyer denies any wrongdoing. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thank you so much. Greatly appreciated. I remember, do you remember, Paul? You're too young to remember this. Michael Barr, help me here. Oh, you're going to get up. I get that. Folks, I remember when Pop-Tarts came into the kitchen for the first time.
Yeah.
I mean, you know, like you remember Captain Crunch for the first time.
Yeah, sure.
Pop-Tarts showed up, and we all stood in the kitchen and just looked at a box and go, what in God's name is this? They weren't even like famous yet or anything like that.
Put them in the toaster.
And you put them in the toaster and burn them.
Yeah, because you go too
and
long.
you know, I burn them, and that's what you'd eat. But
and then some
it was a
tang to wash it down.
revolution.
Some tang to wash it down.
You know, I mean, it's amazing.
Yep.
At College Station, Texas, it is one of the four food groups.
Right, exactly.
Lone Star
Barbecue,
beer
yep.
and Pop-Tarts are in there. So, Jess Benton, did you survive on Pop-Tarts?
I did, and also strudels.
Strudels.
Yes,
very
but
good.
then I had the bad habit of just wanting to eat all of the icing, and then you're supposed to have like one or two, but then I'd eat the whole box. So then
My father would go nuts because one of my sisters wouldn't finish the Pop-Tart, nutritious as it was.
I love them.
Like,
They're-
Lisa, they were so good.
so not good.
We're going to do an equity update here because there's a lot of story stocks right now working. What do you got, Jess? What are you working on this morning?
Well, actually, I was looking at the options market potential move here for CPI day. So heading into this, Stu Kaiser over at Citigroup, he crunches a lot of the options-related data.
We had him in studio today.
Right, and
Yep.
so they were seeing a potential 1.2% move in either direction for the S&P 500 today. But as we know, volatility, as y'all have been talking about, elevated in general. So usually the straddles the day before a CPI day like this, they've averaged around 0.8% over the last 12 months. So you've had CPI days with the S&P 500 down about 5 of the past 12, but a lot of that had to do with, say, earlier this year when those reports were a little bit stubbornly high there. So it'll be interesting because we saw a huge move yesterday, big rally in the S&P 500,
Right.
and we're getting close to kind of some technical resistance levels for the S&P. So it'll be interesting to see kind of how
Right.
things shake up and close today.
From where you guys sit,
Yes.
like the put-call ratio,
Right.
It's like ancient. You have no idea. Paul, remember the pay? Remember,
Yeah, absolutely.
What was it?
Sure.
There was something else. Trin.
Oh, Trin, that
Trin.
measures volume. Yeah.
Yeah,
I keep a close eye on that.
30 years ago or whatever, Paul, you couldn't be on the street unless you did Trin.
Right, because you can see the buying and the selling pressure.
Does anybody look at put-call ratio anymore?
So it's a little convoluted, and with Trin is interesting because a lot of times when I talk to technicians, especially with the rise of ETFs and other forms of fractional trading as well, it hasn't worked quite as well, but you usually use them as inflection points. So when you see big lows, say with the S&P 500 in October of 2022, or what would have happened during the pandemic lows, different instances like that, or like in December of 2018 when the S&P 500 had bottomed on Christmas Eve, you can see those inflection points when selling pressure or buying pressure can go either way. But that was something I was looking at last Monday after we saw that big sell-off.
Have you ever made money in options?
No.
I'm like 0 for 14.
Yeah, forget about it.
Paul's
Futures,
over it.
options. Yeah, exactly. All right, I'm looking at for the S&P 500. Here's my technical analysis knowledge. The RSI function, relative strength. We're it's oversold at 30. It's overbought at 70.
Yeah,
We're
if you look
sitting
at
right
last
smack in the
week,
middle.
right where it hit 30 on a daily basis,
Yep.
that's when you saw it rally for also
Wow.
the S&P 500, the
I love this
NASDAQ
stuff.
100. But a lot of times technicians will look not just for daily charts, but they'll look weekly, monthly as well. But because things were just so dramatically oversold that day, you saw that big bounce.
I mean, Abigail Doolittle, who covers the markets for Bloomberg Television, she's a big technician, and she says it's not only the range is 30 to 70 on the RSI. It's kind of where the momentum is and kind of the trend. The trend is sharply higher.
Right.
And we still got room to go to get to 70. It seems like from a technical perspective, bouncing off that craziness from a week ago Monday, maybe the market's still got room to go from a technical perspective.
And you have the S&P 500 yesterday actually crossed back above that 100-day moving average. It's actually around 53.16. But if you look at that 50-day, getting really close to that 54.51.70 there is where the 50-day is, just a whisker away from that. So that'll be interesting to see if that ends up being for systematic trading that might have those algos tied to it if it bounces or not.
I use a fancy moving average thing invented by George Kleinman, legendary at Merrill Lynch years ago. And I must say, to your good moving average analysis, they're incredibly elegant. This drop down perfectly nailed the SPX long-term moving average I use, and the second iteration coming up off of it. It's called a kiss, folks, when the candlestick, I call them candle pins because I'm from Boston. When the candle pin hits the moving average, that's called a kiss, and I have a perfect kiss off not the band ball, the kiss. I have a perfect kiss off the long-term.
Are you a fan
of
Kiss, Tom Keene?
I never was. Lisa, she's got posters still up in her bedroom.
No, you know what we found out today? Lisa Matteo's a fan of New Kids on the Block.
Oh, I believe it.
Okay, thank you.
I was always like an NSYNC gal.
Okay.
We didn't sync last hour.
Backstreet,
You hadn't been badged in yet when we did that. What do you think about the Mars takeout? Is your equity desk done anything on the Mars thing?
Well, I think it's a big story too, and I think it's important just to give you like a concept of kind of like what that means for that particular industry and kind of what that tells us more ahead. But I think for us, it's been more of the looking at the macro, looking at the flows, looking at especially positioning, because Deutsche Bank actually last Friday, they put out how, especially if you're looking at systematic or discretionary investors, how much it was cut under, because they obviously was over positioning toward tech, but now you're seeing those rate sensitive corners of the market like utilities, REITs, continuing to see not too over positioned, but we're seeing a flip now between tech and then those two corners.
So what's happening in your research literature? What's happened to the Mag 7 dynamics?
So there's
so
there's a Mag 7. We have in my G where I save my charts, you can see the valuations for the Mag 7 and how much they came down. So it was trading above 30 for those valuations for those Mag 7s. They came down to about 27, 28 when you're looking at the forward price to earnings ratio after the sell-off that we saw last week. So they came down a bit. Be interesting to see kind of how this plays out the rest of August.
Do you run them semi-log or do you run an arithmetic y-axis?
Well, so we have custom index charts that we'll build in for our equities team. So that one's specific to...
I'm just trying to impress you. I have no idea what I'm talking about.
And she Jess writes like all the time. She's publishing all the time. I think they might get paid by how often they
do. They get paid by the syllable. No, she studied under Cameron Kreis, and it's like Ginsberg. They get they get paid by the syllable.
Yeah, exactly.
This is what we do.
It comes in. What are you going to write about after the CPI report?
So actually, I was looking at Gina Martin Adams. They have their economic regime model where they look at, that's also can be more of a contrarian type indicator. So for instance, at the end of 2022, when it hit a low, that would have been the contrarian indicator to say buy stocks the next 6 months. And then we had that huge rally that first half of the year. Right now, it's in not the best range, but it's more in a range that shows you it's probably going to be a little bit more volatile for stocks depending on how the data comes out. So that's some stuff we're looking at.
I don't want Sam Rowe to do the work. Sam Rowe.
I love Sam. I know Sam.
Well, I don't love him. But Sam Rowe is front running you all the time. Can you get
Tell
out
him that.
front?
Tell him that.
I want to know.
He's very kind. That he'll give us shout outs in his newsletters whenever he sees our earnings related coverage. So
okay, is a guy like Sam Rowe. The fact is, we've had history here. I'll let you define it from 25 to 17.58, whatever on the VIX.
Right.
Have we ever seen this before?
So
I don't think it's like almost like a flash crash and we're getting over it.
And then also it's important to look at the VIX curve as well as in the skew to see the demand for hedging. So if you look at if you're looking at the hedging against the SPY tracking the S&P, that's about costing actually 2 times more right now than a gain for 10%.
Bye, girl. Put the headphones on. In sync. Put the headphones on, Jess. It's very important. It's deeply emotional. In honor of the middle child, where we played this song 4,000 times in August of years ago. She's out in L.A. She's at a Starbucks right now in L.A. First
Okay.
cup of coffee. Backstreet Boys. Boy band summer.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo celebrating a Mars transaction. They acquired Cheez-Its this morning, so it's Cheez-Its Day here. I'm going to have I haven't been eating it so far, but later in the 9 o'clock hour, I'll break open my daily pack of Cheez-Its. You got to stay with us, folks, for the next 60 minutes. We start strong with Stephen at Ricchiuto of Mizuho. Lots to talk. We could talk to him for the whole hour. Sheila Kayoglu will join us, and Jeffrey. She is exquisite on Boeing. Think about when you get on a Boeing or an Airbus, how do you feel? We're going to talk to Sheila about that. Michael McKee will drop by, of course, with all the economics and into retail sales tomorrow. And then Stacy Mintz from PGIM on quantitative equity analysis. So it's a powerhouse hour. Paul, do I see a lift on the screen? I mean, it's not PPI. But I'm sorry, put them together. PPI, CPI, 2.9%. NASDAQ up 39 points.
Yeah, we'll take that. I mean, again, a little bit of a lift here. We just kind of flash back where we were a week ago, Monday. Such a response here, positive response in the markets from what was kind of a technical blip in the market. But here we are, up a little bit here on the CPI data.
Let's get to it right now. For the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
Yeah, we do have green on the screen after underlying U.S. inflation eased for that fourth month on an annual basis in July. So I want to get to the figures quickly. When you take food and energy out of the picture, core CPI increased 3.2% in July from a year ago. That's still, though, the slowest pace since early 2021. The monthly measure rose 0.2%. That's a slight pickup from June's low reading. But the news not really moved markets too much. Bloomberg reporting it looks like the market was expecting something softer than economists had predicted. So right now, NASDAQ futures up about 0.2%. S&P futures up 0.1%. Dow futures little changed. We have the 2-year yield at 3.97%, up 4 basis points. The yield on the 10-year 3.85%, and that's up 1 basis point. Some big deal-making news. You heard about it. Mars agreed to buy Cheez-It Pop-Tart maker Kellanova for nearly $36 billion. Kellanova right now up about 7%. And shares of Victoria's Secret on the rise, up 14%. A leadership announcement's the reason for that. Hillary Super, she's a top executive from Rihanna's rival lingerie brand, will be the new CEO. That is your Bloomberg Business Flash. Tom and Paul.
Talk about rip up the script. Lisa Mateo, thank you so much. Who's got the best job on Wall Street, Paul?
Oh, Steve Ricchiuto?
No, Alex Pelle. Is that how you pronounce it? Alex Pelle? Alex Pelle gets to work with Stephen Ricchiuto and Dominique Constant.
Oh, okay.
I mean, this is like nirvana. Alex, if you're listening, you got the best job on Wall Street. When you get angry, what do you lecture young Alex on?
Well, number one, in this day and age, you can't get angry. But typically, the reality is younger economists don't really understand Keynesian economics.
Right.
Because they've stopped teaching it.
And 100% agree.
The basic ISLM analysis that we all learned and had to get drilled into our head is something they all just ignore. And that's an important understanding component in terms of figuring things out easily and quickly on the fly.
Where is the dynamics is always LM, Fed. What is the dynamics of the IS curve right now?
Well, I think the IS curve is going to run a risk of shifting to the right. And that just implies that the underlying intersection between growth and interest rates could wind up being higher. And that, I think, is the risk that we're going to run that a lot of people don't really take into consideration as they, push for the Federal Reserve to cut interest rates.
So if you filter that through DSGE of Gertler and Clarida, Richard Clarida, very generous with his time with us last month, and he made clear away from the academic mumbo-jumbo of your Columbia, Richard Clarida made clear he sees a reset above 2.0%. If the IS curve shifts, that's one way you get there, right?
That's 100% correct.
I did okay there?
Yep,
Lisa,
did.
Can you get me an extra bag of Cheez-Its? I deserve it today.
You got it.
So, Steve, has the Fed waited too long that for people like me, I should start worrying about a recession?
No, they haven't waited too long whatsoever. I think the real risk in here is that they move more quickly than they fundamentally should, and you wind up with a reacceleration of inflation. And that, I think, is the bigger risk. Because to me, in the environment where the IS curve, as we were talking a minute ago, shifts to the right, it's shifting to the right in an environment where we are not dealing with the new normal period. and we're dealing with a real normal. The new normal was the abnormality.
Okay.
The real normal environment that we're looking at is much further to the right. And now if we're looking at a risk of shifting further to the right, it's higher interest rates and higher growth because you have higher inflation.
Do we have a solid labor market here at 4.3%?
4.3%. You have a very solid labor market, and that's the point. I mean, the traditional measure of the natural rate of unemployment is 4.5. And we keep on adjusting these numbers at the Fed's level. We keep on lowering the bar in order to cut interest rates. First, they lowered the bar by raising the inflation number that was consistent with them cutting rates. Then they lowered the bar again by lowering the unemployment rate that was consistent with them cutting rates. And now at the last meeting, basically the chairman says, well, if things just stay where they are, we can cut rates.
In Newtonian plug-and-chug mathematics, we have a Taylor rule. You got a couple plugins there, and one of them is the labor dynamic of America. Out of Jackson Hole, is there any efficacy to the Taylor rule when Royal Bank of New Zealand cuts interest rates today? I mean, is the Taylor rule in play at Jackson Hole to say, let's go?
Well, I mean, I think there is this desire to cut rates, which is what you're getting at, and I think you're seeing that in a number of places. You have to look at a number of places have a different macroeconomic environment than we do. That's number one. Number two, I think when you're looking at what's happening, watch the currency. The currency is critical here because it's a debate, or it's a battle in the U.S. between domestic cyclical forces and global deflationary forces. And those global deflationary forces are real. They're palpable. I understand them. You don't have to go much beyond than just looking at the latest news coming out of China, and have to look at what's happening in terms of Europe and other parts around the world. Global deflation is real, but so is domestic cyclical inflation. And the currency has been the factor. DXY, your Bloomberg measure on the currency, went from parity 100 to 116. We're now coming back. We're at 102. I don't know what it is right now, but we broke through the 103 level. We're heading towards 102 earlier today. You get back to parity, and guess what? The dollar's no longer allowing global disinflation to be imported into the U.S. economy.
So is the U.S. economy relative to the rest of the world still, I use the term, exceptional?
Yeah, I mean, it really is. We have the liquidity involved. We have strong balance sheets. We had a very activist fiscal policy approach. We still have an activist fiscal policy approach. We have a very broad, deep financial market that's looking at conditions, and corporations are looking at this environment and saying, this is a great environment to come in and borrow money and deal with my financing because these levels of rates are going to be low a year from now.
One of my it's not like I've been overt about it, but I think everybody that listens knows I believe we're going to have a debt issuance frenzy here as CFOs continue, particularly off a $20 billion Mars transaction. Very quickly, Steve Ricchiuto, to Jackson Hole, what does Powell have to say, or what does Powell have to not say?
Well, he's going to repeat everything he said in the post-meeting press conference. This is a chairman who lines up on the side of wanting to cut rates, but he wants a unanimous decision, and he's getting pushback on that unanimous decision. So I think at Jackson Hole, he bides his time. He just does what he did at the post-meeting press conference, which was go beyond the policy statement. Very succinctly, he went well beyond the policy statement. He's gotten some pushback. So I think we see a chairman that goes no further than he did at the post-meeting press conference.
Steve Ricchiuto, thank you so much. With Mizuho this morning, equities elevated a bit, futures up 8. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. The UN Security Council held a meeting on the tensions in the Middle East as Israel waits for a potential reprisal attack from Iran. U.S. Ambassador Linda Thomas-Greenfield is repeating calls for a ceasefire deal in Gaza.
We've called on both sides to resume urgent discussion on Thursday, August 15th, in Doha or Cairo to close all remaining gaps and commence implementation of the deal without further delay.
Ambassador Linda Thomas-Greenfield says a ceasefire is the best way to bring immediate relief to the people in Gaza. Meantime, the Biden administration has approved a more than $20 billion weapons sale to Israel. We get more on that from Bloomberg's Rosalind Matheson.
Well, this is the approval of a big defence deal that we knew was in the works, and it involves up to 50 fighter jets, F-15 fighter jets, upgrades for existing fighter jets, everything from, vehicles, ammunition, radar equipment. It's a big deal. It's got a lot in it, but the reality is that these planes are not going to come at least until 2029, so there's some years away.
Bloomberg's Rosalind Matheson. Donald Trump will hold a rally and speech in North Carolina. His campaign is billing as a significant economic address. The event is this afternoon in Asheville. Tropical storm Ernesto is dropping torrential rain on Puerto Rico and has left hundreds of thousands of people without power in the U.S. territory as it threatens to strengthen into a major hurricane en route to Bermuda. Ernesto is expected to become a hurricane later today as it moves away from land. The storm is forecast to move through open waters for the rest of the week and make its closest approach to Bermuda on Saturday. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Cheez-Its up 7% right now. They're going to do a rename on it with Mars. I've had 3 emails, not 1, not 2, not even from Lisa Mateo. Tom, forget about Cheez-Its. It's Cheez-It Snapped. Are you familiar with this?
I am not. Is that a new play
on
the
cheesy,
Cheez-It?
thin, and crispy crackers.
Ooh,
it's like what they serve at the bar household.
Okay.
It's Cheez-It Snapped.
So you got to, I think the whole consumer.
It's like a cracker. Yes.
In consumer products, it's all about taking an existing brand and just deriving around and doing things all around that existing.
The toasted ones too that are like overburnt Cheez-Its.
Yeah, that's what Steve Ricchiuto was recommending. See, I mean, he was giving us his recommendation. Who cares about his GDP call? Now I got a new cracker call from Steve Ricchiuto.
I don't think we're going to do this within the schedule in this hour, but Paul, it saves for the 10 o'clock hour. I think it's germane. Did they buy the Kellogg's snack division, including Rice Krispie Treats?
Yeah.
So someone else wouldn't buy it. Was it a strategic acquisition because they didn't want somebody else to get it? I think that's so much of it.
Could be. We're going to have Jen Bartashis on in
are you?
Yeah, the next hour from Bloomberg Intelligence. She'll break it down for us here. I have
Maybe
a question
she'll bring
for you.
Cheez-It Snapped.
Maybe we might. I'll ask Jen about that.
Jalapeno Jet crackers.
She's probably modeled out the Cheez-Its revenue line for them. $1 Million Cowboy Bar. Are you going to be frequenting that?
I don't know if we'll get there this year. The schedule's very, very tight.
I'm not sure Lisa's been. Has she been there? Because you might need to take.
Bramwell, I think she shut it down last year, like 2 a.m. It's a really lovely site. It's got the tourist trap. They're selling the shot glasses out front, and all that. But on a perfect Wyoming night with the mountains in the background, in a cowboy store, as you look at the $1 Million Cowboy Bar, off to the left is a store where you can afford nothing. It's got cowboy hats for Lisa, and they slot in at like $500.
Okay.
All right. There's a line out the door, and there's a park across the street. So it's just really, really lovely. They got it.
We need to get
cold.
Lisa Bromwich there.
You and I couldn't afford anything. I'd have to. Well, the road went out, but you drive to Idaho like 80 miles away just to find it.
That's right. That road did go out.
Yeah.
Yeah. Okay.
But it's like really, really stupid expensive.
All right.
Jackson Hole next week. Lisa Abramowitz and myself.
Great reporting coming up.
Chairman Powell with the speech from New York. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene and Paul Sweeney with your opening bell report. So yesterday we saw this good lift to the markets at the open after PPI rose less than expected last month. So how are the good markets going to react after CPI data came in, well, pretty much on target? When you take food and energy out of the picture, core CPI increased about 3.2% in July from a year ago, but that's still the slowest pace since early 2021. So let's get to some of the reaction right now. We'll start with the S&P 500 up about 0.1%, 7 points, 5,441. The Dow, little changed, up nearly a point at 39,774. And finally, we get to the NASDAQ, up about 0.2%, 43 points, 17,200. 230. The 2-year yield at 3.98%. That's up 4 basis points. And the yield on the 10-year, 3.85%. And that is little changed. At the open, I want to check in with, yes, Cheez-It Eggo maker Kellanova. Their shares
finally.
up about 7%.
Pringles free.
Pringles free. He doesn't like the Pringles. But yes, Mars agreeing to buy the company for nearly $36 billion. That is your Bloomberg opening bell report. Tom and Paul.
I was talking to Michael McKee once, Lisa, and we were deciding with kids. There's always one kid in your family where Eggos is like the food group, like for 24 months, 36 months. And in our freezer, there was a pack of Eggos that I think was in there for 7 years.
They stopped
forever.
caring after a bit, yeah. But the Pop-Tart, they'll always eat the Pop-Tarts.
The Pop-Tarts, we go out to 12
always
years
eat the Pop-Tarts.
on the Pop-Tarts as well. Michael McKee joins us, food expert for Bloomberg News, and also economics is well. I don't even know where to begin. Steve Ricchiuto was in. It was absolutely brilliant, Michael, on the soup that we're in. Does Jerome Powell give a disinflationary certitude tone to his speech in Jackson Hole?
I don't think so. I mean, I think he'll suggest continued progress, which is their mantra. He doesn't want to go out on a limb yet. They will have another CPI before the next meeting, have another jobs report. They'll have a PCE inflation report. So he'll be cautious. He'll say we're on track.
Are they as far off the mark as they were when the transitory debacle? Because
that's a big.
The people we're talking to, are basically saying let's go, right? Yeah.
That's the argument on Wall Street. Are they behind or not? And the Fed officials argue they're not behind. Some of them say we aren't convinced it's time to cut rates yet. Not that they think they should be rising, but it is a debate that you can't really settle until it's too late when you look back. But I think that at this point they feel they're not too late. They could move if they need to, but we'll get another indication tomorrow when we get retail sales. We'll see if consumers are pulling back. And Friday we get the Michigan sentiment numbers, and we'll see how people are feeling about all this.
Are there still hawks on the Federal Reserve? And if so, what's their argument these days?
Well, it's a moving target, what you call a hawk or a dove. I mean, when you're talking 25 basis points or something like that, a situation. You have Mickey Bowman saying that she's not yet convinced that we need to see a rate increase now, but she's willing to entertain a rate decrease. She's willing to entertain the idea. And Raphael Bostic is sticking to his longtime projection of just one rate cut this year, probably by December. However, if Jay Powell comes in and says, I think we are ready to cut rates on September 18th, I think both of them would go along with it. So it's not a super hawkish situation. I don't see a dissent at this point, in part because the data are going in the right direction, and in part because it doesn't look like the economy is falling off a cliff, in which case they would want to be cutting to save the economy. This is, we're still, in their view, quote unquote, normalizing.
Does it have to be unanimous to change rates, or just majority?
No, it doesn't have to be unanimous. It has to be a majority. But no governor has dissented since 2005, and it's been like 4 or 5 years since we've had a dissent from a bank president. So I just don't see this being the kind of close call that would lead to that.
How do you address, I brought this up with all sorts of people, Common and Tversky, regret aversion. They're scared stiff. I mean, I get it. They're waiting. But is there a skeleton in the monetary closet they're all looking at, which says, man, we screwed that up years ago?
Well, you can go back to the Volcker years, but things were different then. The CPI was different in its construction. But recently, I think that they're more scarred by the fact that they were late getting to this. They don't want to start cutting rates and have to raise them again. They feel that would, A, be bad for the economy, and B, be bad for their credibility. So they want to make sure that now is the time.
Right. So we're going to hear from Walmart this week. We're going to get retail sales tomorrow. I guess to me that's still one of the question marks, the consumer out there. I mean, the bifurcation of the consumer, I guess it's always been there, But boy, it just seems to get more and more and more pronounced. And now inflation on top of it, another headwind for so many consumers out there.
Yeah, consumers are still looking at the level of inflation, which is elevated, not at the month-over-month change. And so that's the argument about why so many people still feel bad about inflation, although we've seen this big decline in the rate of inflation. And that'll be interesting. It'll be interesting to see what Walmart has to say, because they're generally perceived as a down market retailer. And we'll see if they say people are cutting back, because if people in the down market are cutting back, and Walmart sees that going forward, then that would be something to be a little bit more worried about.
Right. When you see retail sales as a nominal statistic tomorrow, do you adjust for inflation? Does Mike McKee do real retail sales in your head when it comes out?
Well, yes and no. You do it to figure out whether people are still spending and what the Fed might think of it. But the numbers on a month-to-month basis are comparable in a non-adjusted basis. So that gives you the idea of where we're going.
On YouTube live chat, I mean, they don't give a damn about your Fed coverage. They just want to know what you think about the road out north of Jackson Hole. Like, a lot of people live in Idaho, and the road, I guess, is getting fixed.
It's not fixed.
It's fixed.
Has it been
It's
fixed?
fixed, yeah.
Okay.
So did you take the Swan Lake, detour?
No. When I was out there,
15 trips?
when I was out there earlier, I was able to go straight over the mountain, because the
road was okay.
When I saw the damage, I thought this will take a year to fix, and it took 3 weeks.
Wow.
It's amazing job that they did.
Now, do you guys camp out when you go? Is there like a Bloomberg tent or something when you guys go out to Jackson Hole? Is that how it works?
Well, they're working on my travel arrangements right now. I think I got a pup tent outside, in the deck there.
I have to ask this question, because this came up on television this morning. The people in this room, when David Kelly said, "We're on the road to 2%," suddenly in my head, Bob Hope and Dorothy Lamour popped up.
No one on the TV set knew what you were talking about.
No, they all kind of got this blank look on their face.
Right.
And I felt really old.
Yeah.
So you guys, I get
no, Tom's probably not me.
Lisa has no idea.
I know who they were, but not their reference.
But I mean, seriously, Ellen Zentner's out there fishing for trout. Are you going to go fishing like with Matt Lloyd at Western Angler? I mean, you like hire someone like Matt Lloyd at Western Angler and do the fishing thing for 2 days?
I'm out there to work, Tom. The boss is listening, so
there's a picture of you on a horse, and it's not at the $1 Million Cowboy Bar, and it's not Gus the horse in New Jersey. It's you on. Do you have a horse out there actually?
No, I don't have a horse. I was riding a friend's horce.
But we have central bankers from around the world coming. Is that right? Is that how it works?
Yeah.
And
they
just
go
economists, and they come from around the world, so they must be going crazy when they get to the
They do
Teton Mountains.
on Saturday afternoon. They do have horseback riding for the central bankers and everybody else if they want, and I'll guide if they need.
Right.
Who's your most important conversation out there if it was to happen?
If it was to happen, it would be Jay Powell. He isn't going to talk to anybody.
He held the door for me last year.
I think
He said, "You're tall."
we'll be talking to a number of Fed Bank presidents, so that'll be our most important.
Michael McKee, Lisa Bramwell, our full team out at Jackson Hole. Looking forward to that. Bramwell, I talked to her yesterday. She is going trout fishing. Takes a canoe out with a canoe paddle, hits it over.
But she'll have a guide. She'll go top notch.
Michael McKee, thank you so much. Please get up for Mr. Barr here. We got to slide Mr. Barr into the slot. Green on the screen here. It's a little bit of a lift to the market. Don't want to oversell it after the festivities yesterday, but up 0.1%. It's pretty good. The VIX 17.48. It's a wow statistic.
Well, Tom, I'm looking at the Kellanova deal, and the first thing I do when I see an M&A trade is I go to the MA screen on the Bloomberg terminal and see which bankers got paid. Citi represented Mars, and Kellanova is represented by Goldman Sachs and Lazard. Everybody's getting paid.
Everybody's getting paid today. With our news in New York City, here's Michael Barr.
Thank you very much, Tom, Paul, Lisa. The focus of the presidential race is turning to the economy. Democrat Kamala Harris plans to roll out her vision at a rally in Raleigh, North Carolina on Friday. We get more from Bloomberg Government's Jonathan Tamari in Washington.
The economy and immigration are two issues that give Republicans a lot of hope, even as Kamala Harris has had this great rollout, this big surge in polling. Their belief is that once we get past the kind of initial excitement around Harris, the change of face in the Democratic Party, that fundamentally voters are still going to be unhappy with her on the issues.
Bloomberg Government's John Tamari reports Harris has already talked about pushing corporations to lower prices. Former President Trump has accused Harris of stealing one of his ideas, ending taxes on tips. Trump has an economic-focused rally of his own today in Asheville, North Carolina. Amid worries in Israel about retaliation by Iran for a couple of recent assassinations, Gaza ceasefire talks are supposed to resume tomorrow, but Hamas is now indicating it won't go. During a meeting with the United Nations Security Council, U.S. Ambassador Linda Thomas-Greenfield called for Israel and Hamas to return to negotiations for a ceasefire deal that will end fighting in Gaza and return the remaining Israeli hostages held by Hamas.
I cannot stress enough President Biden's view that it is time to bring immediate relief to the long-suffering people in Gaza and the long-suffering hostages and their families. The best way to do that is a ceasefire in Gaza with a hostage deal.
Meanwhile, the U.S. has approved $20 billion in arms sales to Israel, including scores of fighter jets. In a surprise announcement, Japan's Prime Minister Fumio Kishida says he will not seek re-election next month. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
There he is, folks, celebrating the Kellanova deal, eating his rich crackers. Hopefully, Anthony from Sparta's not paying attention here. Cheez-Its. You paid a lot of money for those Cheez-Its. What was it, $23 billion or something? I mean, this is a big deal.
Already
$36 billion.
Yeah.
Jim Caron likes the Doritos with a pound of salt on them. What are they called? Latin?
Oh, I don't know.
They're like, you know, the new jalapeno, whatever.
The Takis?
Yeah.
The Takis are toxic.
Those are good. I don't have those.
I thought you were supposed to be Mrs. Jack LaLanne, and now, man, you just named all the stuff that I never
I know
heard
what
of
the
that.
kids want. That's what they want, the
man.
Takis.
I'm trying to figure out, what do you think the margin is? This is like luxury food goods. I mean, you know, the
Let's
packaging
assume-
probably costs more than the Cheez-Its.
All right, I'm looking at Kellanova here. EBITDA margins, about 18% here.
That's good.
Net income margins, about 10%. But this is a
That's
company
real
that's
money.
got Kellanova's, they're going to do about almost $13 billion of revenue this year. EBITDA, about $2.3 billion. Free cash flow, Tom, I know you like free cash flow. The snacks business is pretty good business.
It's private
$1.1
company.
billion of free cash flow.
And they're going into a private company. That has not been discussed enough, that Mars is not publicly traded. That's not a small.
And what's also amazing is they're going to do, you know, the total enterprise value, as Lisa pointed out, is $36 billion because there's some debt at Kellanova. Cash. Just, I mean, so the credit profile of Mars, a private company, is just extraordinary that they can go out and write a $36 billion
Well, yeah, they may be
check.
getting some help on that.
Oh, yeah, sure. They'll go to their the banks. They'll be more than happy to lend. Or maybe go to private equity. I'll be interested to see where they
In the 10 o'clock, do you have Jen? Did you get Jen?
Yeah,
in
we
at
have
the
Jen
10?
Bartash.
Slot it in, folks. Seriously, for Global Wall Street, we continue the conversation into the 10 o'clock hour. Jen Bartushis will join Paul Sweeney and accompanying here on the Mars transaction. Red and green on the screen. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, we've got a mix of red and green on the screen, and this is after core consumer prices eased for a fourth month in July, rising 3.2% from a year earlier. But here's the thing, it's still the slowest pace in 3 years. Apparel, auto costs declined, so did airfares. Hospital services posted a record drop. So right now we have the NASDAQ down about 0.1%, 28 points. The Dow, little changed, up about 16 points, and the S&P 500, little changed, down about 1 point. We have the 2-year yield at 3.94%. That's up 1 basis point. The yield on the 10-year, 3.83%. That's down 1 basis point. We have spot gold lower, $2,459 an ounce. Brent crude, $80 a barrel. WTI crude, $78 a barrel. Moving the markets, well, Victoria's Secret up 20%. It announced a new CEO. It's nabbed the top executive from Rihanna's rival lingerie brand to lead its turnaround. And then you have Alphabet's Google shares down about 2%. It's not just for the new Pixel lineup. Sources saying that U.S. Justice Department considering whether to force a breakup of the company after a court ruled that it monopolized the online search market. And finally, UBS ADRs, they are higher, up about 5% after earnings smashed estimates. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. Greatly appreciate it. Joining us now, an important conversation, particularly for you that have missed the Mag 7, you're in the Mag 7, you want to be whatever in the Mag 7. Stacey Mintz joins us with PGIM, their quantitative solutions group with huge heritage of looking at the equity market. Stacey, how do you use the word quantitative at PGIM every day?
Well, it's a core part of our business every day. We're building stock selection and portfolio construction models so that we can form portfolios that are well diversified and are finding all of those alpha opportunities in the different parts of the world. And particularly, talking about small caps, there's a lot of good opportunities and there are a lot of overlooked opportunities. So good space for these days.
Does it lead to a greater or lesser portfolio turnover?
Portfolio turnover, when there is volatility like we've seen in the market the last couple of weeks, that's a good time to spend some more turnover because we really want to be able to capitalize on some opportunities after all the technical trading is done. There's a lot of dislocations we can take advantage of, so that's when we'll bump up turnover a little bit more.
What are your models showing you today, Stacey? It seems like we've got earnings kind of hanging in there, inflation moderating, maybe a Fed rate cut. What are your models showing you?
So the kind of nice but maybe boring thing about being a quantitative investor is we're not just diversified, but we're also balanced in the type of stocks that we're looking for. So we're always looking for companies that are fast growing, that have really good growth opportunities. But then we're also looking for companies that are more slowly growing, that are better on the valuation and quality side. So when things get really bumpy and there's a lot of questions around growth, we're seeing, especially in small cap space, that those higher quality stocks are more likely to hang in there and give you more opportunity, especially after we come out of a more volatile period.
So in small caps, I mean, I guess that one of the challenges in small cap is there's not a lot of research out on these companies. How do you guys account for that?
That's the beauty of it, because those companies are less followed, so there are more inefficiencies. So we're looking at data not only from the balance sheet and the income statement, but we're looking at a lot of other elements of these companies. I think one of the big developments in quantitative investing a couple of decades ago actually was the use of natural language processing. So being able to go through company transcripts and news and pull out ideas like what companies are innovative, how are they related to other companies in the industry, and how are those companies performing? So you can get a lot of information from just news and transcripts and don't necessarily need to focus on the analysts.
How do you respond to our listeners and viewers who are comfortable in cash, whether it's a more supple quantitative approach like you're advocating, or even something on the edge of buy and hold? The people in cash aren't going to enjoy those strategies, are they?
Well, I think, from a total portfolio construction point of view, right now cash isn't hurting you. You're getting a decent yield on it. We are going through some, a transition, but things can turn quickly in the markets, and you really don't want to miss out if you're a long-term investor. You want to be exposed to some of these, potentially higher returning areas. The key there, again, is to be diversified. You don't need to go in and pick a couple of key stocks or decide whether to just go into the Mag 7 or not. There's a lot of opportunities in a more balanced kind of portfolio that you can enjoy and sleep at night.
Stacey, what are some of the factors that have some of the highest weights in some of your models?
So we try to be pretty balanced between growth, value, quality, and what we call linkages, or how a lot of these companies are linked to one another and what that could mean. I think the area where we think there's more promise going forward is quality, because it's been really an underappreciated factor in the market. When the markets have hit turmoil in the last couple of years, everybody's flocked to large cap growth. And not surprising, those companies were earning money, they were run well, they were high quality. But there is a lot of question now about, how far can AI take them? Can they really grow into these really stretched PEs that we're seeing now? So I think that's where small caps are going to have more of an opportunity. Earnings are better there now. So we've had earnings struggles in small caps for quite a period of time now, but that's improving. So that's another positive.
What is the mood you see towards mergers of any size, including what we saw today with Kellogg's and with Mars? I mean, do we go into 2025 with a bolt-on, if you will, of enthusiasm? Could be M&A?
Yeah, I think so, especially if growth is slowing a little bit. Some of these companies that have cash on hand are going to want to find ways to grow, and acquisitions is certainly a way to do it. And if there are segments of the market that have been ignored, like we've been seeing, those companies are seeing that too. So they can really, get these high quality, potentially high growth companies at a good price. So that is activity we can definitely see picking up, especially as interest rates are falling.
Stacey, thank you. Stacey Mintz with us this morning from PGIM and their Quantitative Solutions division. I don't know what to make of the market. Red and green on the screen. I mean, maybe you could fix it in the 10 o'clock hour.
Yeah, exactly. Maybe Alex Steele, when she comes in, can help us fix it. But, we got the S&P pretty much unchanged there, Tom. The Dow's up about 90 points. That's 0.25%. The NASDAQ, however, off about 50 points. That's 0.3%. The Russell also off slightly.
I mean, between Neil Dutta and Steve Ricchiuto today, Renaissance Mac and Mizuho.
Yeah.
I mean, both of them are just saying, look, this is where we are. And, I think Steve was more kind, but they're like, okay.
Now we got time to cut. It's time to cut here. And I guess now the question will be, and maybe we'll check in with Ira Jersey at some point, but is it 25 basis points? What does a 50 basis point cut tell you if they were to go that route?
50. I think on a historic basis, that would be, I don't think Jay Powell wants that at the first
I think you're right.
His report.
I think 25, and
it's
to relieve the pressure a little
Drew
bit.
Mattis with MetLife earlier, just saying he agrees with Dutta. Let's go. And
yeah,
maybe that's why the markets get out front here. Key number VIX 17.34.
Yeah. There we go.
17.34.
We're going to get back to your 15 level soon.
Yeah, I can't fathom it. I've lost.
Can I call out Bitcoin a little bit of a sell-off here, Tom? You might have just overlooked it, off 1.25%.
Oh, look
We're
at
down
that.
to just below 60,000. But remember, again, Bitcoin that Monday morning, 10 days ago, it sat right at 50, bounced off of that low, and here we are back up to 60,000.
Lisa said to me the other day, she said, can you just give me some, I don't want Tom Petty again. I don't want Hart. I need boy bands.
Who doesn't need
So we had the pretend boy bands earlier, Backstreet Boys in Sync. We go authentic for Lisa Mateo, the lads from Boston.